Services, where the budget makers meet the India Inc. Every year, the union budget sets the course for the economy, but this year's budget is a game changer, offering massive tax relief for the middle class, ensuring more disposable income, and at the same time, maintaining fiscal prudence while driving economic growth. It's a budget that doesn't just aim for numbers, it aims for impact. More money in people's pockets, more investments in key sectors, and a roadmap for long-term economic stability. But what went into crafting this vision? How does it translate for businesses, for investors, and you, the people? Today we bring you exclusive insights from those who shaped the budget and those who will be executing it. Before we begin our power-packed discussion, let's take a look at the special AV capturing the key highlights of Budget 2025.
It was a budget that put a big smile on the faces of India's middle class. In her 8th consecutive budget speech, Finance Minister Nirmala Sitharaman declared that an individual having net taxable income up to 12 lakh rupees would not be required to pay any tax.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. So, average income of 1 lakh per month other than the special rate income such as capital gains under the new regime.
Under the new tax regime, the income tax slabs have been revamped to bring substantial relief to all taxpayers, with the threshold for the 30% tax slab now being raised to 24 lakh rupees. Calling the next 5 years as a unique opportunity to realize Sabka Vikas, the Finance Minister reiterated the government's focus on Garib, Yuva, Annadata and Nari. She also laid down the government's key priorities to steer the country on the path of continued development.
For this journey of development, our four powerful engines are agriculture, MSME, investments and exports. The fuel, our reforms, our guiding spirit, inclusivity, and the destination, Vikasit Bharat.
The budget's farm focus was evident in the government's commitment to develop 100 agri-districts, address underemployment in agriculture through skilling, investment and technology, and enhance loan limits for Kisan credit cards. The Finance Minister also announced significant enhancement of credit availability for startups and micro and small enterprises, customized credit cards for MSMEs, and a new term loan scheme for 5 lakh women, scheduled castes and scheduled tribes, first-time entrepreneurs. The budget also proposed expansion of seats in top engineering and medical colleges, a 10,000 crore rupee fund to strengthen India's startup ecosystem, and a 20,000 crore rupee allocation for a private sector-driven research, development and innovation initiative.
ये बजट एक फोर्स मल्टीप्लायर है। ये बजट सेविंग्स को बढ़ाएगा, इन्वेस्टमेंट को बढ़ाएगा, कंजम्पशन को बढ़ाएगा और ग्रोथ को भी तेजी से बढ़ाएगा।
Well, that was the budget at a glance. And with that, let's get straight into our first big conversation with the budget makers themselves, the key officials from North Block who played a crucial role in shaping the fiscal policy. They will be in conversation with Shireen Bhan, Managing Editor, CNBC-TV18. Ladies and gentlemen, please put your hands together for the first panel discussion. Please welcome Tuhin Kanta Pandey, Secretary, Department of Revenue and Finance, Government of India, and Dr. Arunish Chawla, Secretary, Department of Investment and Public Asset Management. Ladies and gentlemen, a huge round of applause, please. Shireen, the floor is yours.
Thank you very much, Vani. Good evening, ladies and gentlemen, what an absolute pleasure it is to welcome you all here to the 11th edition of the CNBC-TV18 Budget Verdict. Yes, we've been doing this for a decade now, analyzing the fine print of the budget with the budget makers themselves in the first interactive session with leaders of India Inc. Many, many thanks to the Finance Secretary and the DIPAM Secretary for joining us here this morning. As I promised, this is going to be an interactive session, so get ready with your questions here for those of you who are here with us at the Oberoi Hotel in New Delhi. And those of us who are joining us online on our YouTube channel and are watching us on television and tracking us on social media, send us your questions for the secretaries. We're starting now. Use the hashtag CNBC-TV18 Live and Budget with CNBC-TV18. We will take your questions to the secretaries live here on the CNBC-TV18 Budget Verdict. Gentlemen, before I talk to you about the budget, Mr. Pandey, let me talk to you about what we've seen happen over the weekend right after the budget speech was delivered by the Finance Minister. President Trump going through with his threats of imposing tariffs on Canada, Mexico and China. The global markets volatile, in fact tumultuous to say the least at this point in time. Commodity markets, currency markets reacting to the comments that have come in from the US and the tariff war escalation. Mr. Pandey, how worried should India be? What would your top concerns be as you see the threats that are playing out today on the trade front?
I think we recognize that there are geopolitical headwinds, and I think that was also stated by Finance Minister in her speech. This geo-economic fragmentation has been going on for some time. And when President Trump, when he was campaigning, he had also indicated what he will do if he comes to power. And I think he has gone along with whatever he said. Now the question is that we recognize that if we have escalation of tariff wars, then certainly there will be an impact on global trade and also on global growth. So this is something which we have anticipated it will happen.
You've anticipated it will happen, but how prepared are we to take measures, appropriate measures, to either retaliate if they were to impose tariffs on India, or to be able to make good of the current trade war escalation between US, Mexico, China and Canada to start with? These of course threatened Europe as well at this point in time. And linked to this, the question on what we have seen as far as the customs duty streamlining is concerned, also the cut in CBUs, both two-wheelers and cars and many other products. Are we trying to dangle a carrot, so to speak, amidst this trade war, sir?
First of all, I think the FM was asked this question yesterday, and she replied, and that's been reported in the papers. We should not really anticipate something which is not really stated. The kind of thing which you say, you know, tariff against India. This has not been stated. I mean, if the US admin or anybody has not really stated, so why should we really be saying so? So that will be premature and not warranted, because you know these are different grounds on which the tariff is being put in. You know, maybe grounds on immigration, maybe with China on the old disputes regarding, you know, whether China is doing enough to do that and give market access to US. So far as we are concerned, we are a very open economy. If you really look at the US imports into India, most of them are into a very, you know, the tariffs are very low. They're in the range of, you know, up to 10%. They are in 2.5 category, they are 0 category, 0%, 5%, 7.5, 10. Incidentally, if you look at our industrial goods, out of 8,400 odd tariff lines, 6,000 tariff lines are already below 100, close to the ASEAN rates. And these are MFN rates which are equally applicable to US as well. So therefore, India is protectionist and neither intends to be protectionist. And therefore, I would say that this is an apprehension which is probably not warranted. The second point you mentioned about, you know, the BCD rate rationalization. Well, if you really, you may please recall July 24 budget, in which Finance Minister had removed 7 rates.
Yes.
And she had stated very clearly, we will do a comprehensive review of tariff rate structure, and we will go line by line, and we will bring it a reformed structure in 6 months. And that is what has been delivered in this budget. What we have done is, we have looked at our tariff schedule, and we have found that on a large number of items, although our tariff schedule is having a number which is much higher, the applied tariffs are much below that. For the information of your viewers,
Yes.
I would like to say that there are 3 things. First, there is a tariff rate, which we call it a BC rate in the tariff schedule. In that schedule, you have different rates. Now that is the maximum rate where we can go, and they are authorized by Parliament.
Right.
And we take it to the budget and put those things in the schedule. But then we have a notification powers on the which we apply the tariff rate, and
Yeah.
we can go up to that rate. And that is what we call effective rate. And then of course there is what is called an import duty or effective incidence, where you add on the effective rate, which is an applied rate,
Yes.
you also add the cesses and the surcharge, whatever is applicable, and find out what is the total rate which will be applicable at the time of imports. So when we do that, when we are looking at the BCD rates in the schedule, they are different from applied rates. And when we have done the analysis, we have found that a lot of commodities we have had rates which are, actually applied rate is much, much lower. So what we have done is, we have brought the rates and what we call it a tariffization.
Right.
We have brought it down, and 51 such tariff lines have been brought down to rates either 0 or 5 or 7.5 and so on, within that band of 0 to 100. The second thing what we have done is, we had some high rates, and they were just on very, very few items. Like 150 rates was just on one thing, that if you have a lab chemicals and you are using that as to reroute alcohol, which is in the agriculture side,
Right.
into sort of misclassified route, then we had a punitive of 150 thing, and then we have brought down to 70. So we have now 25 rate has been removed, BCD rate in the schedule. 30 has been removed, 35 has been removed. We have also removed, 100, 125. All of these things have been removed. And now we have only 170 rate for
Yes.
those which is 40% and above. And the other one, we have brought it down to 20%. So we have now rate at 0, and then we have 2.5, and then we have 5, and then we have 7.5, and then we have 10, and then we have 15, and then we have 20. And a high rate we have only one, which is 70.
70.
We don't have any more 150 rate. We don't have any more 125 rate. We don't have any more rate of 100. We do not have any more the rates of 25, 35. So this is a reform which we have done,
Right.
with the exercise looking at 8,000 tariff lines.
And
So certainly it is not a reactive situation.
No,
at
it
all.
isn't. It isn't, and it was promised in the last budget, and an attempt was made to actually start the streamlined process in the last budget, which is carried forward this time around as well. Sir, if I could get a comment from you on where you see the currency today, new record low on account of, again, the trade war that is escalating at this point in time versus the US dollar, the impact and the implications, and how the finance ministry sees the rupee's movement from here on.
Well, I think, as I said there, this is a challenging time. And obviously, when you have a challenging time, when the markets are reacting over what might happen, I think the markets are looking at the risks to global trade and global growth. Obviously, to some extent, they will go for safe haven, like the capital will moves pretty quickly between countries now. And so therefore, typically the people will look at safe haven and go to US. And some of the flows will actually move in. That's also happened in our stock markets, where FPIs have really parked themselves back there. and anticipating what might happen. This also happens when the Fed actions are anticipated. Like, if you recall,
Yes.
there were also similar situations post-Ukraine crisis. There was also global inflationary pressures where Fed Reserve and several central banks, including RBI, hiked the rates. That time also we had these situations where capital was moving back and forth, especially safe havens. So it moves away from emerging markets into safe havens, and therefore, there will be a certain pressure on the currency. But this is something which the Reserve Bank of India, which is responsible for exchange rate management, and our management is, rupee is on a free float. Rupee is on free float, so rupee is not really thing, but only we take care of, RBI takes care of macroeconomic stability and exchange rate stability to, stem any unwarranted volatility. But there are certain secular trends which are allowed to operate because that is how the system works.
No, fair enough, sir. I understand that the RBI will do what it needs to do or what it feels is appropriate as far as the currency market is concerned, and it is very clear that the RBI has decided not to intervene in the currency market at this point in time. But, from an import bill perspective, with the rupee now depreciating to almost 87.26, that was the last rate that I saw before I left the studio, the impact on the import bill specifically, sir.
There are a couple of, there are different moving parts into this. Now you have also, oil is one of our important, imports, and it is pretty inelastic. So if you have an elastic imports, they will actually adjust fairly easily. If you have inelastic imports like oil, we must have to import no matter what, at whatever price. Now there also, while, we have an exchange rate issue right now, that means rupee has depreciated. We have also a fairly good, prognosis, for the dollar rate for oil.
Okay.
Because oil is the way the US will produce more oil, and the way indications are that the oil prices will not really move up. So to that extent, at least the dollar price, we don't anticipate very high, upside. The second thing is that, you also have an impact on imports, exports. In exports also, to the extent of imported inputs, obviously the cost rises.
Yeah.
But some of those duties are actually given back because exports are exempt from duties. So therefore, there is a drawback where if the duty paid are, extra duties are paid, and then they are also refunded drawback. Then the ROTTAP and ROSTL, those are the duties which are not linked to the import duties, but the other duties. Those schemes also do remain. And exports actually also, into the extent of value added in the country, they gain the competitiveness.
Right.
It is like actually government giving them money in terms of if the exchange rate depreciation does take place. So therefore, exports get more competitive. So I think overall, we have to really see there are many moving parts into it.
I understand. So let me put it simply, sir, before I bring our guests into the conversation as well as Mr. Chawla, that would the depreciating rupee be one of the top concerns for you today?
I think it's a concern in terms of what's going to happen for the global trade and global growth. In the medium term, in the short term, that's more important. Because that is how, many of our trading takes place.
Yeah.
And India is a fairly open economy, so it's not really a closed economy of yonder years. It's really a very open economy. Imports and exports as a percentage of GDP is pretty high.
Right.
So therefore, we are impacted by global developments, and we are watching the situation.
We are watching the situation. Mr. Chawla, let me come to you now, sir. As far as the disinvestment roadmap is concerned, what has been budgeted is 47,000 crore rupees. It's fairly modest. But I think the larger question that people want to know is there a lack of appetite at this point in time to move aggressively on disinvestment, and we've seen this number shrinking over the last few years. Is that because you believe that it's hard to disinvest, or you believe that there is no appetite for disinvestment? If you can lay out the roadmap as far as the disinvestment roadmap is concerned and the thinking behind that number.
Thank you. I would like to first clarify that there is a composite strategy as far as public undertakings, public enterprises is concerned. The whole idea behind bringing the Department of Public Enterprises and DIPAM together was essentially to emphasize that corporate strategy and asset management go together, and that we should look at them in a composite way, so that public enterprises play their rightful role in the economy. We, of course, we have clearly said so, that private sector must keep growing and it must occupy a greater share of the economy. But public sector, being publicly owned, has a responsibility. It must become competitive and it must share its wealth with the Aam Aadmi, with the common citizens, with the ordinary investors, who is investing increasingly his hard-earned money and his savings into these assets and deriving returns therefrom. And therefore, our strategy is calibrated. And as part of this value optimization and value creation strategy, we follow four, five different things. And the most important being that with corporate strategy and asset management coming together, we are very careful about corporate performance. We have guiding parameters. We monitor the PSCs very carefully and advise corrective action wherever we think they're going off track. At the same time, as you know, CapEx just does not come from the budget alone. It comes from state governments, it comes from local governments, and it comes from PSUs.
Yeah.
And if you see, almost 4 lakh crores of capital investment comes from PSUs. And it is one of our jobs to monitor that and ensure it is on track. Thirdly, we have to ensure a consistent flow of dividend so that the wealth in the public sector is shared with everyone and dividends flow consistently to all stakeholders, particularly the minority shareholders. Last but not the least, we focus on the strategy is calibrated asset monetization. For example, if we did not list the LIC, would you know its market value is 6 lakh crores? And therefore, it is important that you move in steps which are careful, which are calibrated to market, which maintain market value, which are careful about investor appetites, and most important, take care of minority stakeholders.
You know, they're all good points, sir, but if I may ask you a direct question before I get the audience in, what is the IPO pipeline that we can realistically expect as far as PSU listings are concerned? You gave us the example of LIC. What are we talking about as far as FY26 is concerned?
I would not prejudge or communicate market-sensitive information, but what is in the pipeline is already known. It is moving along track, and we'll make the right announcements at the right time.
At the right time. So very quickly to the both of you, and this is a question that's come in since you were talking about dividend. Dividend receipts have increased by 12% in FY26. Even if the RBI gives 2 trillion rupees again, it suggests an over 40% growth in non-RBI dividends. How does this math add up? Finance Secretary, would you like to start? And then I'll come to Mr. Chawla.
Well, if you really look at the dividend, as Arunish mentioned, we are looking at consistent dividend, not maximization of dividend. Because if you maximize the dividend, you basically evacuate the money out and then it doesn't help. for growth of the company. So there is a consistent dividend policy, and consistently also the targets of dividend are being met. Because there is a growth in profitability and there is a growth in overall, in terms of absolute terms also the profitability increases. So if you really see the last few years, the CPSC, the dividends, they are always exceeding the targets. And this year the target is 69,000 crores, which will hopefully be met.
It will be met or bettered?
It will be met because it's a budget target.
Right.
Yes.
Mr. Chawla, you wanted to come in.
I just wanted to reinforce that point that dividends, the public sector dividends were almost 1.25 lakh crores the previous year. We are seeing a sustained near 15 to 20% growth year on year. You would expect them to pay out dividends of 1,40,000, 1,50,000 crores, and only say half of it will go to the government. The remaining half will be shared with the people of India.
Will be shared with the people of India. The people of India have questions.
The people of India mean the shareholders.
We got that, sir. We got that. Shareholders, taxpayers, we've got plenty of, perhaps both sitting here in the audience. Let me come across to you. If you could introduce yourself very briefly and ask your question, sir.
Hi, I'm Sandeep Bhalla. I'm from Dawra Advisors, and there is one question which I have. Shin spoke about, beneficial tax rate for new manufacturing units, and she spoke about how US is, incentivizing corporate tax, reducing the corporate tax. Is there a thought process on why this was not extended in the current budget, or is there something which is we should be expecting soon?
So the expectation was that you'd bring back the concessional scheme, perhaps with 15% or 18%. The sun had set on it in 24, but you chose not to do that. Why not?
I think we don't want to create another scheme for that. We already have two. We don't want to create the third. I think that particular scheme of manufacturing companies was for a limited period it is a post-COVID issue when we wanted certain manufacturing to be quickly initiated. And that was initiated for only the companies which were incorporated fresh, which actually came into commercial production between that period. So it was for a particular purpose. Broadly, the corporate tax reform has already taken place in terms of, the reduction in corporate rates. If you see the new regime, the corporate rates have already been reduced. And it was reduced, in 23. And so therefore, the same system continues. Now, when you are, doing that corporate tax, you don't again create another subcategory of new manufacturing and old manufacturing. If you are manufacturing, you should be taxed the same way. Not that, you set up one plant and it will be taxed differently. And if you are in the old plant, that will be taxed separately. A company is taxed. So I think it was not really a very good way of complicating the scheme. We are for simplification. We want actually more and more new regime to come in. However, corporates are there in the old regime still. Some of the reasons are their own deductions which have been available to them, which are much larger. So slowly they are also coming over here. About 20% of the companies and 50% of revenue has already shifted to the new regime. And I hope that, this will be a gradual process. As far as the individuals are concerned, 75% people have also shifted to the new regime already. Yeah. And we hope that with the latest reforms in PIT, personal income tax, almost everyone will shift to the new regime.
Sir, a quick clarification from you. You talked about that concessional tax scheme, and when we saw the corporate tax reduction take place in 2019, the revenue foregone estimate that the government had put forward, what is the actual revenue foregone on the front of the corporate tax reduction that took place? Because there is some clarification required on that front, linked to the fact that you've budgeted 1 lakh crore rupees as the revenue foregone for personal income tax. The question is it likely to be much higher? Is this more conservative of an estimate that the government has put out?
Well, if you look at the receipt budget, we give a full statement of what is the revenue foregone and what for it is. So please refer to the receipt budget and you will know that if you have this deduction on account of that, how much is the revenue foregone. Coming to the PIT question, now 1 lakh crore is what we have said that we will actually not basically charge and then rebate it also, in some cases not charge. So 1 lakh crore is basically goes back to taxpayers.
Yes.
And obviously we have taken into account that while budgeting our revenue numbers.
So linked to that question is also the fact that are you concerned about the tax base erosion and the kind of pressure that this now puts on the even smaller tax base that you're going to have to work with? Yes, it's relief for a large population of the country and everyone is giving you 2 thumbs up for that. But as policymakers, are you concerned about the tax base erosion that this brings about?
We are not concerned because the point is that we have to collect the tax. We can't keep collecting taxes from this thing where we should not be collecting taxes. It is basically a public choice. It's a public choice. It's a political decision. It is a decision based on what income you are going to be taxing. So when you are saying we increase the tax base, number one, returns will have to be filed in any case. It's only up to 0 to 4 lakh category which is having a nil rate. They will be exempt not to file the returns. But anybody who is looking for rebate, the returns will have to be filed because then only TDS need to be refunded back. And we have a very good system where, the refunds can be pretty quick and, it's largely processed. For your information and information of your viewers, 99.7% returns today are self-assessed, both PIT and corporate put together. The onus is today, it is much like the new kind of governance, where most of the time, like earlier, you used to fill up a paper form and used to give on a window. And then the window will actually translate that paper form into its own system and make an entry, right? And most of the time, there will be some mistake in that data entry, and then you will be struggling to correct your name or this or that, because something which, is a process. That has totally undergone a change. Now, we are portal-based. You open a portal, you do that, and in income tax case, since the PAN number is there, the linkage is there, you don't have to even type your name. You simply get into the PAN, you go into your database, and you look at the AIS. And all in your AIS, you see all the transactions which is there. So we are able to, through a network of information, bring that information together for taxpayers, and it is like, producing a ledger for them. And it's such a good facility.
No, but I think the question that people are asking, and these are many questions that have come to me on this issue, is that instead of expanding the tax base, we're actually shrinking the tax base further. Your comments on that, sir?
Well, I would say that, certain number of taxpayers, say when we are saying that between 7 lakh, which was earlier not paying any tax, and between 7 and 12 lakhs, 1 crore more people will not have to pay any tax. So that part is there. But what we assume is that, okay, the incomes are also rising. The more number of people will graduate from which used to be earlier 12 lakhs and below into this category. And more people will be added, will also keep expanding the tax base. It is not good to really say that just because, you want a tax base, that you must tax the existing tax fellow again and again. You must bring newer tax people into the base, rather than trying to overtax the people who are already in.
Fair enough. Go ahead.
Good afternoon, sir. This is Vivek Gupta from Deloitte. First of all, I must commend you for an absolutely exciting budget. The concept of trust first, scrutinize later, I think stands very well with the taxpayers. There's one specific question that I'd like to ask you, though. There's been a lot of clamor around the fact that our tax law has a lot of provisions which call for artificial valuations. So, for example, when you're doing listed company transactions, depending on the date of signing and date of closing, there's some artificial valuation norms that are set out in the rules to the tax law, which actually are causing listed company transactions to become very difficult. We are all hoping that in the new tax bill that we see within a week, some of this will be addressed, is the government also looking at reorienting the rules in order to simplify the multiplicity of these valuation norms, particularly when, sir, your own government has a tax law which, for the purpose of transfer pricing, for example, allows a fair value to be determined based on the facts and circumstances of the case. So there's a strong case to be made for these manifold valuation norms to go away from the rules in the Act. So if you have any comments on this in the context of introduction of the new tax bill.
Well, I think this is certainly a good question. I think the more complex things we make, the more difficult it is, the more interpretative it would become. So I think our efforts are really towards that, trying to simplify. Now, some of the elements of, like in the new law, new bill which we are bringing, some of these elements we have upfront addressed in this itself, rather than trying to really say that we'll just put it there and then, because it will take time, you know, to be deliberated and get passed. So like TDS, TCS thing, you know, we did some rationalization earlier, we did so many rationalization in this, budget itself. So that will be a continuous process of exchange. Even for example, arm's length pricing also, many people have a lot of suggestions on us. That means how soon we do it. What is the time we take to do the ALP? What is the capacity we have to really conclude them quickly? So therefore, just because, you know, we have an ALP process, it doesn't mean, unless and until we make it efficient, unless and until we make it, you know, timely. So which means that we've got to be really doing the capacity building in our department to do the ALP commensurate with the demand.
Right.
And these are the issues, there's a capacity issues we must address. But all the simplification issues, I think, even if in the new bill, you will find that there are certain things which have been carried over. You will have every chance to give your suggestions, and also the standing committee would also be inviting suggestions from the public, and that those will also be examined.
Mr. Pandey, a lot of the tax experts who joined us on budget day say they might be out of a job if what you've promised of halving the tax code actually goes through. So can you give us a sneak peek of what we should expect or what they should brace themselves for, sir?
Well, I do not know what is the outcome, because what we see will be simple. Whether it will be simple in your eyes or not, I think because it is the beauty lies in the eyes of the beholden, you know. Now the whole thing is, you know, we are making a very sincere attempt. This particular thing, in other sovereigns also, this has been attempted. Some people have taken years, 4 years, 5 years, to change the new law, to rewrite the law. We had some groundwork earlier in some committees,
yes,
which they did the work. But this work, this piece of the work, bringing it has been done in about 6 months. So obviously, you know, while we will say that we have done a great job, we don't know. I mean, so we have to, the suspense is, the jury will still be out.
Yes, the jury is out, and we'll have to wait for you to actually bring the bill.
But what I can say is that the words will be halved, chapters will be halved, redundant provisions will go. There will be a lot of these things which are clubbing, they will come. Speech will be direct. And probably what you call assessment tier or something may vanish. So what we are saying is like trying to say something very clearly, more directly, and that has been our, guiding principles. To what extent we have been able to actually work out, because it's a big team that works and there's so many people who work, and whether the whole guiding principles have been fully kept, I think we will be open to criticism also. But we are making a very sincere effort for reform.
Sir, I can tell you, I'm standing here in the middle of a room full of many experts, and many are tax experts. I could suddenly hear a sigh go out. I don't know what that indicates, but the minute you said chapters will be halved, words will be halved, I could hear the sighs increase here in the audience. But you had a question, sir. Go ahead.
So my question is, I must compliment the way this exercise has been carried out in this budget, despite the fact the new income tax bill is in the offing. And one of the important changes you have made is that you, in the tax deduction at source, so wherever you're feeling that nitty-gritties and you have tried that TCS has been removed, only TDS will be applicable. So my question is, when we are trying to simplify the tax laws, tax deduction at source provisions have been introduced at many places, not to collect taxes, but to have an audit trail. And I believe now a lot of audit trail is available under the GST, because all goods and services are covered under the GST, and when you are filing your returns and documents, most of the information is available there. Is there any exercise on that whatever is being captured in the GST will be taken into consideration while drafting these provisions under the income tax, particularly on TDS and TCS, so there is no duplicity and no complexity, that same information is being served, is available in the government domain in GST, and the same is again being captured in the income tax.
Thank you, sir. Thank you so much. Go ahead, sir.
Well, that is a good question, and I think that is ideally we ought to be doing this. That means basically two different laws should be talking to each other in terms of also import. And I also agree with you, some of them were brought in because, we didn't have the GST, but in the GST that information is already built. I would say that although we have been trying to eliminate all those, but I can't guarantee that, some of it will not really pass on in the draft bill that will be there. But as I said, we will be really open to suggestions. And if we are finding out and the suggestion is that, this is not really required here, so we will eliminate it that also. Like, for example, here we have mentioned, there was a very big pain point. In the sale of goods beyond 50 lakhs, you had said TDS is, the law was all right. All what it said was, if TDS is not done, then the TCS will be applied. This iffy business is a very dangerous business, because the point is, how the TCS fellow, he is independent, the TDS fellow is different. He says, how do I know he has not done TDS? So then I will be caught and I will be penalized, and there will be a, so let me also deduct. So therefore, if actually practically didn't work, yeah, so both started deducting. Now, our intent was only to track, I said, and we had only one person in mind, either or, but it became both. When it became both, then 1% plus 1%, so much of money will be blocked.
Yeah, yeah.
We must realize the more money we block of business, the more uncompetitive we are making them to be, because every money has a cost.
That's music to industry's ears, sir. Not so sure about the tax lot, but it's certainly music to industry's ears. But we have more questions for you. Go ahead, sir.
Good evening all. My name is Sudham. I am from Eastman Auto and Power Limited. We are manufacturers in the solar and the last mile mobility space. So first of all, thank you. Some of the announcements yesterday or day before rather were those that impact the industry positively. My question really was about the solar side of the things. Thank you again for the boost that the industry is seeing because of the initiatives the government has taken. The question really is that there is a significant power electronics side of the solar solution story. And there has been some anticipation in that regard from the industry. Has the government been thinking in these terms, particularly from the Make in India perspective, to help the solar manufacturers here in the power electronics side of the story?
I think that's a good question, and I can see sitting right in front MeitY secretary, who is one of the champions. So you say it, and he's there.
Absolutely.
So आपने कोई compact किया हुआ है.
That is the power of that's the power of CNBC-TV18. You ask and we deliver. May I have Mr. Krishnan join us on stage, sir? Ladies and gentlemen, a big round of applause to the MeitY secretary, Mr. S. Krishnan, who joins us on stage. I don't even have to ask you a question, so the question has already been delivered. So the mic is yours, sir.
No, I think the power electronics bit, as far as MeitY is concerned, is primarily on the semiconductor side, especially silicon carbide and those set of chips which need to be made. That is covered under the India Semiconductor Mission. And we are pushing to see that we have more capacity in the country to handle that. Likewise, there's a lot of research which we are doing alongside various ministries, including Ministry of Heavy Industry and also new and renewable energy sources, on ways in which power electronics can be applied in this particular space. We have a whole project called NAMPET, which is basically on power electronics. And we believe that this is an area of great growth in the country. And we need to stay focused on that area to make sure that we support power electronics through a variety of schemes in the ministry. Some of these will overlap with what is being done in MNRE and what is being done in MHI. But we will iron out those issues and go forward.
Mr. Krishnan, many thanks for that, sir. But if I may ask you, the big expectation was that there would be a new PLI scheme for components that would find its way in the budget. But we're given to understand that that consultation process is still underway and perhaps we will have to wait a little bit longer. Can you throw some light on that, sir? And also on the existing PLI scheme, in terms of disbursals, sir, there are some questions on the disbursals being slower than what was anticipated or what was expected. If you could clarify on both.
On the new scheme which relates to electronic components, there's a process that it has to go through in the government system. Just because it doesn't find a specific mention in the budget speech, it doesn't mean that it won't come up during the course of 2025-26. Sooner rather than later, I'm sure that the scheme will be underway. That's one part of it. And I don't think funding will be a problem. I think if you look at the budget numbers between 2023-24 to what it is in 2025-26, the budget has grown more than twice. It's more than 100% jump. So it's a huge jump from about 12,000 odd crores to 26,000 crores. So I think within that budget envelope, we should have no issue in supporting a new scheme also if when it actually comes up. On the disbursement side, the disbursement basically happens based on the claims which are filed by the companies. And on our side, we try to process them as quickly as possible. The disbursement is basically in two schemes, one on the two PLI schemes, both PLI on large-scale electronic manufacture, which is basically mobile phones, and on IT hardware. PLI on large-scale electronic manufacture, which is mobile phones, is still the best performing PLI amongst all, and disbursement is continuing quite strongly. PLI on IT hardware, really the disbursements should commence only during 2025-26. That's what we were expecting, because the first full year of production was really 24-25, and only when that production is completed will we have claims coming in and companies claiming incentives under that. And many large companies, or not many, but a couple of significant and large companies are coming into the scheme only with effect from 1st of April 2025. So real claims will accrue only during 25-26.
A quick question on the budget allocation for the India AI mission, Mr. Krishnan. I was just taking a look at that. It's gone up from 173 crores to 2,000 crores. While that's a jump of 1,000%, but when you look at the numbers that are being touted about in the US, target billions, hundreds of billions of dollars, the same story playing out as far as China is concerned. Do you believe that this is going to be enough?
I think we need to understand that when Mayoshi's son talks about $500 billion, he's not talking about government money.
Yeah.
He's talking about private money over a period of time which comes in. And I think same is the case in India. The investment is being made. Government is playing the role of a catalyst here. And the investments are really being made significantly in the private sector. There is some government investment, of course, without doubt, but significant amount of investments are in the private sector. What we are supporting under the India AI mission really, and the Minister had recently made that announcement of about 18,000 GPUs being available for use, and that part, the AI compute element having been launched. So those investments are actually happening. Those are private sector investments where government is basically providing demand support. It's almost like a voucher-based system. It's an ability for us to buy the compute facility, and which is going forward.
Just on a note, as a joke, I would say that we should not finance enough to, finance our own
demise,
extermination, human extermination.
So which is why you've been stingy in your budget for the AI mission, sir. It's self-preservation. But that's
humanity must preserve itself.
Absolutely, I couldn't agree with you more. Humanity must preserve itself. Shweta, go ahead.
Thank you so much. This question for Finance Secretary. I'm Shweta Rajpal Kohli. I represent the Startup Policy Forum. We're an industry forum that represents about 50 of India's largest startups. So one very long-standing demand of the startup industry has been around ESOP taxation. We all know the big concern, and especially considering the number of new age companies that will IPO, the taxation on ESOP triggers at the time of exercise rather than at the time of liquidity, and that causes a big pain point to many ESOP holders, thousands and thousands of them across the country. So I think that's been a pain point, and we're hoping it will get addressed in the next week when we're going to see some of those tax changes being announced. And also on share swap, similar problems. There is no liquidity, but there is a tax liability. Any thoughts on the government's thinking around it?
Well, I think in general, I think our ESOP taxation is as per the global best practices.
Okay. Sir, another question or more actually. I think again, it might be premature, but I'll ask nevertheless. The AGR dues for the telecom sector, a lot of reports suggest that the government is actively considering whether you could provide any further relief there on AGR dues. The matter will have to be, of course, cleared eventually by the Finance Ministry. Has it come to your table yet? Is it on your table? Are you looking at it, sir?
You will come to know when it comes.
So it hasn't come yet?
I mean, I think this has been under discussion, because unless and until it is decided, it's not decided. It has to be decided.
It has to be decided, but is it under active consideration today?
No, I think that much for today.
That much for today. Okay, I get my cue. But Mr. Chawla, let me come to you, sir. Because, one of the other aspects of this budget was that it has revived the idea of public-private partnership, something that, 10 years ago, the government had talked about. I still remember very clearly the idea of Triple P India was put forward. Can you explain to us why you felt the need to bring back public-private partnership? How is this going to be operationalized? What do you believe will be the road forward as far as PPP is concerned, sir?
If you noticed, apart from what is being talked about as a value creation strategy in the public sector, the new asset monetization roadmap, 5 years, medium term, has also been announced and mentioned. And that essentially is to re-energize the fixed assets which are there in the government sector and allied government sector and government's agencies and authorities and like railways, highways and so on and so forth. And the idea is that through various models, including public-private partnerships, land lease arrangements, InvITs, REITs, and so on and so forth, we will be able to reactivate this ecosystem. Some good work has happened in the past 5 years that has given us encouragement. We hope to build on it and do better in the next 5 years.
Now, even as far as asset monetization is concerned, a target of 10 lakh crore rupees the government has put out in this budget on asset monetization. Again, for the benefit of everyone who's watching, could you elaborate on what we should now expect in terms of next steps and how fast and swiftly we're expected to move on that front?
Want to take that?
Okay. See, the asset monetization is two kinds. One, is basically asset recycling. You have a certain assets, you part with it, and basically you part with the cash streams and then use those things upfront payment to build up more assets, capex. So there are two kinds of agencies. One is the NHAI or railways, which is the government agencies, where the government money is involved, so the asset belongs to the government. In which case, when you do the asset monetization, certain receipts will come back to you. Just to give you an example, if you have an NHAI and you have a road, you keep on building roads and then you have a certain cash streams which are settled. Then you have a TOT and then you put it out a bid and you say, okay, I write a concession for a certain period and then you take the thing and you give me upfront payment. This money I will then use to do that, to build up more roads. Now, there is a certain level of asset monetization which is done by the companies themselves, which is the public sector. they are also counted in the asset monetization plan because they are done by the CPSEs. Now there it is, the money actually belongs to that CPSE. It doesn't come back to the government, but it is again the same thing. For example, if the power grid, if they were to have a transmission line where a stable revenues are coming, they were supposed to put that particular asset into an InvIT and let that InvIT be bid out and invite certain unit holders where, pension funds and others will also come and invest. That money the power grid can use to build up more transmission lines without debt. But in those situations, they have to consider their shareholders' interest, the way they will like to do the asset monetization. Put together, the asset monetization is basically recycling of your assets in order to build more assets, and several things like NHAI, railways, and the NHAI is the most active in this area, and then you have others also. Arguably, you can do it even in FCI. You can have some land and all. Incidentally, this also includes the public-private partnership, because that is one way of writing concessions, which means inviting the people to invest the private sector money, and you write a concession if you have land or a concession and all that. In case of ports, for example, it is very easy to do that. Like if you have a landlord port like JNPT, they are building up new terminals, etc., with the help of PPPs. They bid out and then they say that one new, without their own investments, since they give you a waterfront, since they give you the access, they are able to bid out and based on a certain revenue share, get that particular thing built. This is also one category of asset monetization.
Okay. On land bank specifically, sir, we're again given to understand that companies like N18L, etc., that have a large land bank, will those be up for asset monetization, Mr. Krishnan? If you'd like to take that, and you as well, Mr. Pandey.
No, I think that will be taken by Arunish.
Go ahead, Mr. Chawla.
Thank you. We have set up a land monetization corporation, and it is essentially a service that we provide to all the public undertakings, because it enables a third-party independent valuation of assets and what is realistically expected, and that itself, is a big step forward. We are going to help MTNL and BSNL in monetizing whatever assets they have, so that the value that is locked in can be redeployed, the liability is cleared, and we can re-energize the sector.
And do you expect that to go through within this in the next financial year, FY26?
Touch wood.
Touch wood. Okay, that's an important headline coming in there. Go ahead, sir.
Thank you. My question is for the Finance Secretary. Introduce yourself. Yeah, my name is Rohinton Sidhwa. I'm from Deloitte. Sir, we've had this ups and downs on the global consensus with regard to the two-pillar solution for taxing MNCs around the world. And last year we withdrew the equalization levy on the presumption that there would be some consensus coming on Pillar 1. Pillar 1 doesn't seem to be headed anywhere. Similarly on Pillar 2, where unless we actually enact the law, we will not be able to collect any information for all the MNEs who operate in India. So any guidance on this? Why is there so much silence from the government with this particular part of it?
There is no silence. Nobody asked us.
Now you're being asked, sir.
No, see the BEPS 1 and BEPS 2. The BEPS 1 was widely, sort of accepted. BEPS 2, the Pillar 1, Pillar 2, there was a statement that, but India had some reservations on a few points. While we broadly agreed with certain principles, there was something on, the amount of compensation and how that compensation will get worked out. Now, given that, now I think the events have really overtaken. Now, the jurisdictions which have actually done the amendments of their laws, they may have to think whether it will be worth doing it. Because the US has said that we are not into it now.
Yeah.
So, all our big tech companies and others, where we had these issues where, the profits, where were the profits going? Now, if US does not agree to it, then how do we really operate it? So I think we are watching, but my sense is that unless and until this multilateral framework also includes, earlier US was in, but now they have said that they are withdrawing.
Right.
So therefore we have to wait and watch and see how it will be actually implementable. We have not actually taken up any taxation measures along those lines, but some other countries have.
Right.
And they will have to in fact review is whether it will be worth doing it.
Well, fair point. Mr. Krishnan, we've got plenty of questions here, but let me bung in a question here as far as the US itself is concerned and the escalation of the trade war, and specifically as far as the IT and electronic sector is concerned. Sir, how do you see this? Do you see this as a possible advantage for India? Do you see this as opening up further space for India? Or are you worried about the kind of volatility that this opens up as far as global trade is concerned? How do you look at it from your sector's perspective?
I think it's right now a wait and watch perspective. I mean, on the one hand, straight away you could say that it might be advantageous to us because tariffs may come down more heavily on other trade rivals, so there could be that issue. But if you look at it from another perspective, you could have a scenario where if the sourcing is from the same country, then will you have a problem in further exports? So we are not yet clear as to how this will play out, and we need to be prepared for all scenarios. I think there is reason for hope, and I think there is reason to assume that electronics as an export from India, which has suddenly become very big in especially what we send out to the US, we need to sort of ensure that we build the domestic value chain more significantly and increase domestic value add so that we protect ourselves against any possible pushback on the value addition point of what happens in India. That's the way we insulate ourselves in the electronics sector.
Hi, I'm Agrawal from Transport Corporation of India Limited. I want to go back to that asset recycling, asset monetization plan. In the last 6 years, the cost of tolls on highways has gone up on a journey cost from 5 to 7% to 15 to 20% of a journey cost. Now my suggestion here is that let's not look at blindly recycling every single road asset that we have, because it is going to lead to some cost increases. On one hand, we are talking about reducing logistics costs in the country. I can guarantee you this is actually increasing logistics costs in the country as we speak. So please look at it in a little bit more holistic manner. I know the new roads will get tolled, but let's not keep recycling all the old roads with toll one after the other. Thank you.
No, but the tolls are really not, they can't really have, it's not a free pass, you know, for increasing toll rates. Irrespective, the toll rates remain the same. No, number of tolls is also cannot be increased. The policy on tolls is very clear. Between one toll to another, there has to be a minimum distance. Whether this remains with the NHAI or whether it goes away out, to some other player, it doesn't make a difference. So what you are essentially suggesting is that NHAI itself should relax the policy, where it should, charge less tolls and also maybe increase the length of the roads on which. But this is some point which we have to really see that, when you have to maintain infrastructure of a very high order, I believe that if you don't do that, then you will end up in getting, the poorer infrastructure and poor maintenance. That is also will not really be there. We have to take a very measured call on that.
Mr. Chawla?
Yes, I would supplement that. It's like the trade-off between a partial equilibrium effect and a general equilibrium effect. There was a time when in the PPP models we just had a simple BOT and annuities, but now we have a repertoire of different frameworks that have stabilized in the highway sector. And as very rightly you said, the TOT models, the toll operate and transfer models have really taken off, and they're helping us, maintain our highways in good shape and helping us redeploy both budgetary and extra budgetary resources into more areas, creating a greater network, which is a huge positive externality. So I would say in the long run, and if you see everything together in the economy, the logistics costs will come down.
Yes. Sir, this is Sukhjit Pasricha. I represent people side in the aviation sector. I work as HR head for Indigo. So my question to you, sir, is I'm very happy to see, in the budget that government has identified the development of 50 destinations for tourism. Please throw some light on larger vision to develop people and customer-centric skills that these goals are met.
Well, I think this is a very important part, of Honorable Prime Minister's vision, trying to, look at tourism in a different way and also involve states. In fact, there is some indication in the budget speech which Honorable Finance Minister delivered, is that, we have to involve states into doing several things because ultimately tourism places are grounded there. Of course, there are many other network issues. One is the network itself, the airline industry. The second is the hotel industry, and it's also been announced that for the purpose of those destinations, there will be also, the hotel industries will be, in specific destinations, hotel industries will get infrastructure status in respect of those places. So that will also help them finance. It's been one of the very important and long-standing demand of hotel industry to be treated as infrastructure, just in case they can be facilitated for financing. So this is one focused approach that, how do we develop this thing. And then, of course, the states have to come in partnership. Then there will be also the central partnership so far as the monuments are concerned, because there is a lot of things which are dealt with the monuments in and around area. I think we have to really develop new sites, new things where, tourism can also flow in. And attendantly, we will have all those growth engines. These destinations will have the growth engines. But the details will be, released by the Ministry of Tourism in due course.
You wanted to come in, sir?
Yeah, with my experience in culture, I would just like to respond to that. The idea is to go by what is called the tourist footfalls. The tourists, the sites, the monuments, as well as the cultural economy that exists around it. This needs to be brought together and in a way that all kinds of cultural products, cultural goods and the creative economy that is linked to it gets linked to the tourist and their footfalls and their visits and their circuits. So that is the idea. The 50 destinations would be selected on that basis. An integrated whole of the government approach would be adopted so that all agencies concerned, including clearances from the regulatory and protective agencies that I am talking about, that comes together. And as Finance Secretary said, the tourist hotels and the facilities will be given the status of infrastructure so that we can realize the potential of our cultural creative economy.
Sir, I had one question. This is Mehul Beda here from Dhruva Advisors. Sir, there was this change in the mergers and acquisitions part where earlier when there was a merger of an industrial undertaking, there was a fresh lease of life given for 8 years, and which has now been changed to say that only it will be applicable for the original year. Sir, we always thought that the thought process was that these provisions where losses can be carried forward or again for 8 years was more as a measure for revival of the loss-making companies. But now the government seems to have rethought on this. Anything on that, sir? That was one. And secondly, sir, there was a mention by the finance minister in a speech that mergers will be fast-tracked, and maybe the thinking here was that NCLT has quite a bit of bottlenecks, and there was something where the fast-track merger scope will be increased. So, sir, any details on that? Thank you.
I think you are referring to 72A. See, the point is that the intent has been, that you carry forward. So you merge, the two people are coming together. Then also you can demerge. Again, in the reverse process will happen when new cases of demerge. So, I mean, it can't be really taken up very opportunistically. I mean, you are trying to bring, merger is your decision of bringing together and all that. Carry forward of losses, whatever the original intent is, that you carry forward for a certain number of years, that intent will be carried forward. So if there is some ambiguity in the law where some players think that actually they can get, start from the scratch and take another 8 years, that was never the intent. So the intent has been made clear, but it has been prospectively, not retrospectively. So if suppose that provision, we have been very careful in trying to do that, so that actually we should not be accused of really, like if it was subject to misinterpretation, then at least clarify going forward that from henceforward you will have that sort of.
That's right. But I know, Mr. Krishnan, we have to let each one of you go, but let me start by getting closing comments from you. To start with, sir, we understand that Sam Altman is going to be paying you a visit sometime tomorrow or this week. What is that about, sir? What do you hope to discuss with him?
I don't think he's paying me a visit. He is expected to visit New Delhi, and he is expected to meet hopefully the Prime Minister or the Minister for Electronics. We presume it is to discuss on, what OpenAI can do for India and the kind of applications of OpenAI in the country, and how well India is equipped and what we can do to benefit from this. This we expect would be the areas of discussion, and this is what we would do.
Is there room for a potential partnership? The Minister has talked about a foundational model in the next 10 months. Is there room for a potential partnership or any kind of exploratory conversation with OpenAI on India and OpenAI working together?
See, I won't rule out any of that, but then the whole point is that OpenAI's model is not an open model.
Yes.
Right? So the ChatGPT is not an open model. So if at all we are going to build on models, it has to be on other open source models which we pick up and work towards. Already, as you are aware, we have put out the request for proposals for building India's own foundational models. We are expecting a number of responses, and many of those, and interestingly, I think what DeepSeek has shown us is that you can actually take a hybrid approach to this, that you can use an existing open source model, build certain parts of it, and then add other elements to make it even more effective. Of course, experts do give us certain cautions, because you really don't know what kind of data the original model has been trained on. So probably you'll have to do some more additional training to make sure that all the biases and prejudices which you fear the original model had are at least to some extent removed. But definitely the opportunity of building on something which has already been built helps us go a little further, and I think that is not something we are ruling out at all.
Not ruling that out at all. I mean, countries like Italy at this point in time have moved forward with a ban, but you're saying that India is not just open to working on DeepSeek, but it is open to hosting DeepSeek on its own servers.
See, our understanding on this is fairly clear. If you use DeepSeek as an app or as their portal, then the likelihood of your data actually going to where their portal, where their servers are is very, very possible. But it is again an open model, so you could actually pick it up and host it on a server here in India, and if it gets hosted on a server here in India, then the data doesn't go away to other places. Of course, there are risks in terms of, again, you don't know the precise data on which the model was originally trained on. There could be certain issues there, but at least you know that your data is safe and it's not going out of the country. So that is an option which we can explore. There's no reason why it can't be explored.
No reason why it can't be explored. So many questions coming in. Once again, Mr. Pandey, I'll come to you on that. On the tax math, sir, and how confident do you feel about the fact that you're going to be able to get this 14% growth on income tax with the cut as far as personal income tax is concerned, and even on things like the securities transaction tax, now that the curbs have come in on the F&O side, a 40% increase, are you being optimistic on that front, sir?
I think if you really look at last 3 years, we have been growing at 20% on PIT side, which of course includes the STT. But one thing I would also like to tell, in the present data situation, we have actually the firms and BOPs, body of individuals and body of persons included in the data of PIT data. And going forward, I think we will like to really bring an accounting information separately for firms, because the firms are really taxed differently, and they are more akin to, to be put along with the corporates. And this information is currently not available because of the accounting thing we have. And going forward from 1st of April, we can bring a system where going forward this information on firms separately would be available, which will be then bifurcated from the individual's data. That will be a very good point, because right now, a lot of things which we are ascribing to individuals are actually also relates to firms. But be that as it may, we have this 20% growth, and therefore, but we have assumed 14% going forward, so we have moderated it. And if you look at from the buoyancy side as well, the buoyancy used to be 2 plus, 2.5, 2, and we have assumed a buoyancy of 1.4 in this budget for the PIT. So therefore, we have taken on board that we are giving away this money. In fact, as I said, taxpayers are partners. We are partnering because we want this money to come back to us. Either you save, or you invest, or you consume. Either way, we are happy.
Either way, you're happy.
The decision making is transferred on this money from the government to the taxpayers.
To the taxpayers. Sir, a quick follow-up question. Again, this is a question that's just come in. The 8th Pay Commission, sir, that has also been set up. Any provisions on that account? Any thinking on the provisions that you will need to make on that account?
Well, that will be from 1st of April 2026. But normally, the report will come sometimes later. So I think the impact of, pay commission will be in the next financial year.
Next financial year. Sir, another quick question, and then I will take final comments from you.
Good evening. I am Abhishek Rastogi. I am tax and constitutional expert and founder of Rastogi Chambers. So my question is this, that when we go to the courts and we settle the issue in Supreme Court, then in the budget we get to know that there are retrospective amendments. So these retrospective amendments must happen in the rarest of rare cases. I think the endeavor of the government has always been to reduce litigation. If first round of litigation has happened and concluded, then sir, what is the need of such retrospective amendments when Supreme Court has already concluded on certain issues? So this was my first question. My second question is that most of the times in the budget is completely focusing only on the middle class. What about the rich? The wealth drain may happen, and there are surcharges which are imposed for incomes above 50 lakhs, 1 crore, 2 lakhs, and so on and so forth. We have seen with our experience that a lot of these people who are earning in high income group category are actually not motivated. They say that, 40%, approximately 39.37 or 42%, if the surcharge is at 37, would be taxed. So effectively, when they end up paying advance tax, more than a month's income, 40 days, 50 days income is going for a quarter in the advance tax payment. So sir, at some stage, and at any stage, they are in any case paying tax on a higher base, because for them the base is high. So sir, I think the surcharge must be looked into. I mean, I don't know, what are your views about it?
That sounds like an impassioned plea, Mr. Pandey.
I think when a tax advisor, a professional tax advisor of many years is discussing with the revenue secretary who joined on 9th of this month, and he is asking me a very, very intricate tax question, God must have felt, okay, with this poor fellow, how will he reply? So he sent 2 Devdoots, Ravi Agrawal and Sanjay, both of them have come, Chairman CBDT and Chairman CBIC, so that, more proper explanation can be given. So that's what, I will just attempt as a very humble journalist, bureaucrat, civil servant, I would say, you know, the rarest of rare. Some cases are rarest of the rare. The case you are mentioning is, you know, it has never been the intent. I mean, first, this is not an autonomous decision of the central government. This has been passed by GST Council, and the GST Council has, you're referring to that decision only, no? So GST Council has already done it, deliberated. So this, you know, we are now carrying out only an amendment because the GST Council has cleared it, all the states will have to do it. But what is the rationale for this? I mean, you have plant machinery, mentioned at n number of places. Intent of legislature was very clear. And some with quirk of typo, somewhere at one place or became and. And now, you know, you have the tax advisors, they have a gala time. Oh, you can save, you know, the ITC will be admissible to you when ITC is not denied, you know. And so therefore you carry on, and this is technical matter. See, intent was not there. If intent were there, many people would have taken it. How many people have taken it? Tell me, how many people would have taken it?
We'll have to take this offline.
So it's a class action thing then.
Well, let me just say.
So I would say that I think that particular error has been corrected. GST Council has taken it, and this government does not believe in retrospective amendments. We have made it very clear. The very first question on 72A I answered. Yeah. We were very careful that we should not get into any situation where the people who have availed it and because we also found that the law was actually ambiguous there. But in this case, the ambiguity was not there actually. The ambiguity was just at one place, this RM. But in many places, this is not there. Of course, much more details will be explained to you by Sanjay, who has appeared at the right time.
Clearly, the CBIC
and on surcharges, I would say we have not increased any surcharge in this budget.
Yeah. So let me end by asking each one of you, and I'll start with you, Mr. Krishnan, the headline that you will leave us with at the end of Budget 2025 and the impact that you hope it will have on the economy.
I think the key thing in the budget is there's an emphasis on promoting manufacturing, and electronics ends up being one of the largest manufacturing sectors as part of the overall manufacturing sector. And what has been done in terms of easing up the manufacturing process, particularly on the taxation side, has been tremendous work. Both the chairman of CBIC and CBDT are present here. So, I mean, the Department of Revenue and both of them have been extremely accommodating on the series of issues and demands that we have come up with on the manufacturing side for the electronics sector. And I think that gets a bit lost in the fine print. But the industry, I know for a fact, is fairly happy and very elated. And I'm sure that now the ball is really in the industry's court to actually lift the manufacturing game in the electronic sector in India in 25-26.
Well, the baton moves now to industry to do more. Mr. Chawla, the headline for you, sir?
I would repeat what Finance Minister said yesterday. It's a budget by the people, for the people. The government has heard the voice of the people. It has responded to that. It's a budget which provides a balanced support to growth with sensitivity and inclusion.
With sensitivity and inclusion. Mr. Pandey, I'm going to give you the final word, and I have to say, sir, you're on fire today. I haven't seen you respond as you have in many years that we've had you here on CNBC-TV18. It's been an absolute joy to watch you, sir. So the headline that you're going to leave us with.
Well, this budget supports growth with fiscal consolidation, with kindness towards taxpayers.
With kindness towards taxpayers. Thank you very much for your generosity, gentlemen. Appreciate you joining us here on the CNBC-TV18 Budget Verdict. Ladies and gentlemen, a big round of applause for the secretaries for joining us here and taking our questions. Appreciate your time. Don't go anywhere. We'll be back with the Economic Affairs Secretary, Mr. Ajay Seth, the Chairman of the CBIC and the Chairman of the CBDT, both here with us, and the DFS Secretary, Mr. Nagaraju, join us on the budget verdict. We'll take a quick break and be right back with you. Keep those questions coming in. We're live and back in a minute.
The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class in nation building. In recognition of their contribution, we have periodically reduced their tax burden. Right after 2014, the nil tax slab was raised to 2.5 lakhs of rupees, which was further raised to 5 lakh rupees in 2019 and to 7 lakh rupees in 2023. This is reflective of our government's trust on the middle class taxpayers. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. So, detail the indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating. Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits.
I think it is one of the best budgets that we've seen in many, many years, and I tweeted it's a dream budget. So first thing is that you normally want money with the public rather than with government. It should just be the general thumb rule of looking at anything, that money with public is better than money with the government. You have not said that, oh, you cut a tax rate across the board, therefore the rich will get much more. It has come to the correct audience in that sense. So it has to be travel, it has to be savings, it has to be these car consumer durable types. As I said, we are not buying those, but they could.
I think we are now getting into
panel. Please welcome on stage, and we have some of them on stage already. Mr. M. Nagaraju, Secretary, Department of Financial Services. Ladies and gentlemen, big round of applause, please. Mr. Ajay, Seth, Secretary, Department of Economic Affairs. Mr. Ravi Agrawal, Chairperson, Central Board of Direct Taxes, and Sanjay Kumar Agrawal, Chairperson, Central Board of Indirect Taxes. Over to you, Shireen, for this panel.
Gentlemen, a big round of applause for the secretaries from North Block who join us here. And they've been very kind. It's been a very busy month for them, not just a busy week, a very busy month for them. So we appreciate you taking time out here to join us and answer questions that are coming in live on our YouTube page, on our social media handles, and of course here from our live audience. Economic Affairs Secretary, if I may start by asking you, sir, as we've been talking about it, this budget has really tried to address the 3 C's: consumption, capex, and consolidation. And it's done well on each of those fronts. It seems to have prioritized consumption at this point in time with the personal income tax cuts. If I could ask you about the concern perhaps that there has emanated on capex, and the question coming in, the capex to GDP has come down from 3.4% of GDP in the BE of FY25 to 3.1% of GDP in BE of FY26. Is this an admission of the execution limits of the government or the limits to the absorptive capacity of the economy? And I'll link this back to the point that was made by the former Finance Secretary here on the budget verdict last year, when he also said that there has to be a limit to how much you can expect the government to do as far as capex is concerned, and perhaps at this 10-11 lakh crore rupees is the peak that the government can do on capex. So if you can explain the rationale, the thinking, and the roadmap from here on.
Thanks for this question. I'll draw your attention to July budget, wherein Finance Minister said that we have brought the capex, public expenditure on capex, to a very high level, and moving forward, our endeavor would be to maintain it relative to GDP at that high level, and expect a similar amount to come from the state governments, and thereafter private sector to chip in. Where we are in that one, till about 5 years back, we were 1.5% of the GDP. That used to be the capex from union budget. Today it is 3% plus. But if we add what the grants Government of India provides to states for providing for their capital expenditure, prime example, if you can say Jal Jeevan Mission, there's a huge amount of provision getting made there. The total provision is 15.5 lakh crore, which is 4.3% of the GDP. And please look at the number. Total fiscal deficit is 4.4%. Yeah. That means almost the entire borrowing of Government of India is going for capital expenditure. Since mid-70s, we never had this revenue surplus. So these are the limits of capital expenditure, what the government can do, union government can do. But even with reference to the revised estimates of this year, the increase, the total provision next year 15.5% is about 18% higher on an economy which will be growing at about 10% plus. So these are the limits, and by sure, it is not a reflection of implementation capacity, but the newer sectors have to be brought in. Newer sectors meaning urban infrastructure is a big sector, and this budget provides for additional 10,000 crore for them. Plus social sectors have to be brought in. Plus public-private partnership where the push has to be given through the renewed effort on that part. Thank you.
On each of those issues, sir, and if I could, address something that you just spoke about, the Jal Jeevan Mission, for instance. The question is, grants for capex to states include schemes, as you pointed out. It includes the NREGS, it includes the Jal Jeevan Mission, the PMAY, etc. A lot of it, which analysts believe is not technically capex. Why would you then include this to look at like the capex budget, is the question, sir.
See, there can be an issues around whether an asset, rural asset getting created out of employment generation scheme, whether that is a typical infrastructure or not, there can be a different opinion. But rural water supply will run into as large as 5 crore, 10 crore, 20 crore, even a 50 crore scheme. These are very much capital assets. So the only thing is, these are not the capital assets which will be on the balance sheet of Government of India.
Okay.
So even if we leave around that part, just come to that what the numbers are. Government of India is spending 3% plus of GDP, plus CPSUs is spending almost another 4.5 lakh crore, which will about 1.5% of GDP, is a substantial amount. The government system, union and central PSUs is spending close to about 19.5 lakh crores, which is 6% plus of GDP. So this is a significant number.
So there is no deviation on part of the government strategy to address growth via capex. That policy objective, that policy intent is steadfast.
That is correct. And there where the balancing were to come in, that on one side consolidation is happening, as you said, a fine balance between consolidation, consumption and capex. That's a fine balance this budget tries to do.
On consumption, sir, and I think, there is unequivocal and unambiguous appreciation for what the government has tried to do to try and stimulate consumption and stimulate demand. But the question is, when do you expect this to kick off? When do you believe we will start to see the real impact of the measures taken by the budget to kick off and provide that consumption boost?
Other measures in the budget, whether it is on a capex or on reforms or several schemes, will always have a lag. But as far as consumption, the big tax relief, which is 0.3% of the GDP, 1 lakh crore, individuals get to know that from 1st April onwards, that is an extra money in their pocket. They may use it for saving, they can use it buy durables, they can buy it for another EMI, for a larger house, etc. So the impact starts immediately, the very start of the financial year, because that money is extra money is available for them to use it in a manner, or even taking the family out for a tourist site, and hopefully within India.
Hopefully within India, and those 50 tourist destinations that you're hoping to put in places to attract more tourism. But I come back and I asked you this question on budget day, sir, and I come back again to the estimates that you believe you're working with. Krishnan, the former CA, said that he expects more than 2% addition to the GDP on account of the measures undertaken on the consumption side. Would you hazard a guess on that? I mean, is that something that is that a number that you're working with?
I have not attempted doing a modeling. This will be based on certain assumptions would be there.
Yes.
But I see that in terms of giving a boost to the economy, this is the fastest means available. And it helps the middle class having an extra income. They take their own decision in whichever manner. Even if somebody were to do the savings, it will remain with the bank or in the financial market, which will go on to the productive activities later on. So I see it as a very, very positive for the economy. When the numbers are coming, normally we see it over a period of time. Any capital investment has a multiplier effect of 3, 4 or even 5, it can come in. What impact it will have, we will see that certainly in high level of consumption. To that extent, the plant and machinery of the private sector get utilized much faster. Or if it goes for the tourism, then hotel occupancy goes up. And to that extent, those owners of those plant and machinery get enthused to invest in the next round of capital investment into the economy.
Well, that certainly is the hope. Mr. Nagaraju, let me come to you, sir, and address the issue as far as MSMEs go, because that was something that the government and the finance minister spoke about in the speech. You know, there was a question here specifically from one of our audience members on why the interest subvention for MSMEs, which was for a period of 5 years, has now been done away with. You know, they believe that it ought to continue. Your take on that, as well as some of the other measures that were announced by the budget, the enhancement of the credit guarantee for SMEs, etc. Do you believe that this will provide the much needed support, the much needed stimulus and shouldering for the MSMEs, sir?
Yeah, see, the MSME sector is one of the highest priorities for the Government of India due to several reasons. One is, of course, employment generation, and the other is contribution to the GDP and also to the exports markets. Now, this is where the highest potential exists in the country for creating additional employment. Now, if you look at the budget proposals that are proposed, there are several schemes to promote, incentivize, as well as give comfort for lending more to MSME sector. Now, the other scheme, apart from the MSME, there are several schemes for the MSME sector in this budget. The other thing we have revamped is the Stand Up India. Earlier it used to be Stand Up India to promote first generation entrepreneurs among the women, SC, ST. That limit has now been extended, and we'll be looking at a large number of entrepreneurs, first generation entrepreneurs, which will be again micro or small enterprises in the MSME sector only. So the government intention is very clear that whatever is the central credit guarantee schemes are there, they are going to lend to the MSME sector. And then the second one, which of course the partial credit enhancement facility that we have proposed, and the NAFID, of course that is for the corporate sector. If they are going to issue the bonds, the credit rating will ensure that their credit rating is enhanced.
Okay, so the credit rating will be enhanced. Those are the measures for the MSMEs. But on the insurance FDI, sir, is there an expectation or an estimate of what that could mean potentially in terms of FDI inflow into the country? Are you aware of how many may be interested at this point in time? There are all kinds of numbers doing the rounds.
While I can't hazard the guess, let me give you the number. From 2000 to 2024, the total FDI flow into insurance sector is 82,000 crores. Now, 24 years, only 82,000. Whereas, the country of our size, dimension, and challenges and potential, I think we should have actually attracted huge amounts of insurance FDI. Now, there are issues related to that. Those issues are being now addressed in the budget proposals of the finance minister. One is, of course, FDI enhancement. Technically, a owner can own more than 51%, and then he's a owner. It could be 51 or 70, 60, anything. Ownership-wise, there is no issue at all. But we want to give comfort that a foreign investor, if he bring in the FDI, he can hold up to 100%. That is a comfort we are giving. The second issue, which is interconnected, is the rules. Rules have some restrictive provisions which we follow. That rules we are going to review and simplify, ensure that the investor, the FDI owners have full flexibility in appointing the senior management personnel and also for repatriation of dividends if required. And of course, anyway, we have already mentioned in the budget speech and the condition that entire premium has to be invested within the country.
Yes.
That remains. So we expect, there is a lot of enthusiasm during our consultations with the stakeholders. We see huge potential for FDI inflows.
How many companies, sir?
Many companies met, many companies have said, and we have to see ultimately when the bill is approved, notified, then ultimately the taste lies in the pudding, okay? But we have to see ultimately how many will come, how much it will come.
The pudding is being cooked, so to speak, at this point in time. But Mr. Seth, since we're talking about FDI, if I could ask you about the FDI harmonization, sir, and where we actually stand on that front, and what realistically we should expect now in terms of timelines.
Last budget, February budget, the interim budget, Finance Minister announced that we will be signing more FDIs, more BITs, and for the two countries, United UAE and Uzbekistan, those were signed. And the current model BIT template of 2014 had a legacy issue. We were suddenly seeing a spurt of litigations which we never thought BITs will be interpreted in a manner to get us over there. That's why a model BIT was brought in, and earlier BITs and BIPA were terminated. But the last 10 years we are seeing that a consistency of the policy, unidirectional, improving upon the policy, that gives us a lot of confidence that we can provide a better set of protection for foreign investors. So the attempt is, and our conversation with those two countries as well as other jurisdictions, is what the investors are really looking for. So between the state interest and the investor interest, that's the one area to move forward. I will not like to judge into or say that what areas can be, but if you can cite just one example, model BIT says an entity-based protection, meaning one has to have an entity in India, registered in India to do so. Whereas investors are expecting an asset base. Those who are coming through an FPI route should also be eligible for investor protection. That's one area we are actively looking for to get into, and there are several others.
Several others. Gokul, you wanted to make a point?
Thank you, sir. It's good. My name is Gokul from Deloitte. Glad to hear that the BITs are back on the negotiation table because investors have been asking for it. There was some amount of debate on whether tax as a subject will be included in the BITs or not. Is there been any sort of thinking on that topic?
Well, the Finance Minister said we will make it more investor friendly and we will have a deep review. At this point of time, to get to say that what is on the drawing board would be rather premature. So allow the government to complete that exercise, but idea is complete it over next couple of months, maybe in about 2 quarters, and then come out with a model or model BIT which is suited for 2025 requirement. At the same time, there is a realization that the world has changed. There are so much of global uncertainty. We have to shift our game itself to attract more FDI.
Yes, we do have to bring in more FDI into the country, and I think that was articulated by the Finance Minister as well. But CBDT Chief, if I could come to you on the direct tax code, which the Finance Minister has promised will be presented in Parliament in a week's time, sir. And I think, the FS gave us an indication that it's going to be half the number of words, half the number of chapters, and hopefully half the pain that the industry has dealt with as well. So if you can take us through, in the last 6 months to be able to put this together, what it's actually taken the department to do, what has been the focus area, what you've prioritized, and what we should expect.
Well, yes, we did this comprehensive exercise of comprehensive review of the Tax Act as per the announcement which was made by the Honorable Finance Minister in July 24. And yes, it was a very involved exercise where we actually involved more than 150 officers of the department who worked on different themes and different chapters. The basic idea was to make the language simpler, to cut redundancies which had crept in over a period of time. It is about, this act is 1961 Act, we are in 2025, so more about 64 years. So, some provisions had become obsolete also. So we identified those provisions, identified the gaps that had also crept in, redundancies and duplications were taken out. And as a result of this entire exercise in this 6 months, the act has been now, the proposed act would be about half. I would not say exactly half, but it will be about half. It will be about half because we have to take care of different situations, you see. The shift in approach is that, well, we have taken some provisions which were elaborated in the base act to the rules also. And also we took inspiration from the similar exercise which was done in other sovereigns. For example, UK, Australia, a simplification exercise was done in those sovereigns also. They took substantial time, but we got some lessons from that exercise that was done. And going ahead, the approach is that how can we provide more clarity to the taxpayer, because that is very important to minimize litigation. and to minimize that scope for multiple interpretations. Of course, when the language gets changed, the possibility of fresh set of interpretations also happens.
Yes.
But what we are actually looking at is coming up with the guidance notes also and comprehensive answers to possible questions that may emerge and for the taxpayers' benefit, so that that clarity is there, that when this existing language and the new language, how much of it is in sync and is in harmony.
How much is in sync and in harmony, and I would imagine that the iffy portions are being done away with at this point in time, as the FS told us. But we have a question here for the CBIC chairman as well. Anita, go ahead.
Thank you. So my name is Anita, I'm from PwC, and I have a question regarding tax certainty itself. Thank you so much for a lot of budget announcements which were really helping in this line, but I do have 3 suggestions, sir. The first is regarding customs. So, sir, can we have something like an advanced customs valuation agreement similar to the transfer pricing where we have the APAs, so that the valuation of the goods which are imported in India, there is a certainty with the importers with regard to that, especially from the related party transaction perspective. So that's point number 1. And we do know that it happens in certain other countries, especially in South Korea, it has already happened, and it is working very well. So the second one is regarding GST. Now, I do know that GST is central and state, but my question, sir, is that we used to have a sectoral committee, around 18 of them, which were actually focused on the various nuances of the GST implications on the various types of transactions in that particular sector. And there were FAQs, questions, there were discussions with the industry, and thereafter they came up with that particular FAQ, etc. So can we revive that? Because I do believe that there are a lot of areas where those type of clarity is required, because GST is not same for everybody across the sector. And so the third one is that from a tax certainty perspective, again in customs, we have the Advanced Ruling Authority. We do have 2 benches, one in Delhi and Mumbai. But I do believe that India is such a large country, and I think we should be having at least a couple of more, whether in south or east, if those can be added, sir.
I don't even need AI to take my job. Anita's taken my job away from me. Thank you very, very much, Anita, for a very comprehensive set of questions. Mr. Agrawal, go ahead, sir.
You have mentioned about advanced ruling, and advanced ruling is operating from 2 centers, from Delhi and Mumbai. The number of applications which are received by the advanced rulings, we are finding that those are disposed of within very reasonable time. So there is no build-up of pendencies. But as you have mentioned that it can be created at other places, but now we are in the era where things are done online. Applications, because physical presence is not required. So documents are submitted online. Documents, and in case any kind of hearing is required, that it can also be provided online. In fact, we are emphasizing of conducting all sorts of hearing by adjudicating authorities online. We recently issued a circular in that regard also. So then I don't see any reason that we should create the authorities at different cities. So that is first thing. Second thing is that advanced ruling generally don't go into this related party transactions, because that is meant only mostly related to classification related matters. As far as related party transactions are concerned, we do admit that there is sometimes delay in finalizing the such kind of investigations which are carried out by the department. But now, as you notice, that in this budget we have brought a provision on of setting a time limit for finalization of provisional assessment. In fact, that will be a big relief and will provide certainty within a reasonable time of 2 years. The cases will be finalized, many will be in much shorter time, but the things which were dragging for years, that will not be the situation in times to come. That is one thing. The second thing which I would like to mention about, you mentioned about GST. In GST, the GOM, which has been set up to look into the rate related issues, they are going into the rates on different chapters, different sectors. So they are going into all the details, whether litigation is arising, they are going into the slab rates, they are going into socio-economic issues, how the rates should be set. This exercise initially was conducted when the GST was introduced.
Yeah.
That time the exercise was mostly on the
neutrality principle, that whatever is being imposed on a particular item will continue to be imposed at almost at similar rate. But now this exercise is more comprehensive. So that's why I can say that GOM is taking some time to finalize their report and present it to the GST Council. Thereafter, yes, it will be deliberated, a consensus will be built, and the rates will be notified.
So Mr. Agrawal, if I may ask you, as you said that, the rates when they were set earlier were set on the basis of a revenue neutral rate. So what will drive the rate rationalization exercise this time around? It has been, of course, pending. There have been, there was a first GOM and now there is an expanded GOM that's looking at this issue. But what is driving the rate rationalization exercise, and what do you believe will be a comprehensive rate structure that India should aspire for as far as the GST is concerned?
I would like to say that in this rate rationalization exercise, all the issues which are maybe related to number of tax slabs, maybe how the items are placed in these different tax slabs. So all these will be looked into, and now we have the experience of more than 7 years. The type of litigation which has arisen by such placement of items in different tax rates. So with that experience, we know that where the litigation is arising, whether it is arising on food items, whether it is arising on maybe automobile components, maybe in certain other sectors. So with that experience, I think we are now in much better position to decide the rates.
So do you believe that 28% slab, which was originally the slab as far as Sindh goods was concerned, but then saw a lot of additions coming in, sir, do you believe that there is a case now for significantly pruning and rationalizing the items that fall under the 28% slab?
So there I would also like to mention, I could not complete that what are the things before the GOM. One of the issues is how to raise the revenue also. So the items which are placed in the bracket of 28%, if that is brought down, as some time back FS was also explaining, that if something is brought down, something else will have to be raised. It cannot be one-way traffic, that everything is brought down. Then we'll be losing on revenue. Revenue is very important for states as well as center.
So you're saying 28% might in fact be expanded to include more items?
No, I'm not saying that. But because how the rates have to be reset, that is before the GOM. GOM will have to take a view.
But surely the fitment committee, which gets a lot of the proposals from your department as well, has a view on this, sir. So, what are we talking about? Are we talking about merging of 12 and 18, or are we talking about expanding 28? What are we talking about?
I would say that fitment committee does not play a role in this entire exercise, although the TRU, they provide the secretarial support to the GOM. But the decisions are taken by GOM, not by the fitment committee.
No, I understand, sir. But do you believe that there is a case to be made for pruning 28, or is there a case to be made for expanding 28 at this point in time?
Because once we do this exercise and move some items from one rate to the other rate, we'll have to do lot of maths also to see that the revenue which is getting collected does not come down. If it does not go up, but it should not come down.
Come down, yeah, fair enough.
So the thing is that whatever is on 28%, we cannot say that many will be moved to lower slabs, but definitely, yes, to reduce the litigation, items will have to be moved. Certain items which are of similar nature will have to be moved in one basket.
Okay, will have to be moved in one basket. If I could ask both the CBIC and the CBDT chiefs 2 quick questions that have come in online to us. On litigations, in fact, just this morning, or I think yesterday, the headlines on Volkswagen moving courts against a $1.4 billion tax notice. Between both direct taxes as well as indirect taxes, what are we talking about in terms of disputes at this point in time, and the process of trying to resolve disputes? How much is stuck at this point? Sir, if I can start by asking you, and then I'll come to Mr. Agrawal.
Yes, so insofar as the disputes, the appeals that are pending on the direct tax side is concerned, so last post July 24 budget, we have increased the thresholds of filing the appeals That is, for ITAT tribunal it is 60 lakh, for High Court it is 2 lakhs, and for the Supreme Court is 5 lakh. So, so the thresholds have been increased so that the appeals are brought down. There's a lot of pendency insofar as commissioner appeals at the first appellate stage is concerned. And therefore, in the last 6 months, we have actually ramped up the manpower. So the commissioners, in fact, the principal commissioners of income tax have also been given the responsibility of deciding the appeals. And that way, the disposal of the appeals is going up. We hope that when we end this year, we would end up with more disposal of appeals. The third initiative that was taken was the Vivad se Vishwas scheme, which has just ended on 31st of January. And about 40,000 appeals, the applications have come on Vivad se Vishwas. So if we see the total pendency of about 5 lakh and odd, so about 8% of the appeals which were pending, the taxpayers have opted for Vivad se Vishwas scheme for resolution. Apart from that, from the alternative dispute resolution perspective also, we are also setting up dispute resolution committees. So which would be actually taking up small appeals to take care of and to ensure that the small taxpayer whose demand is pending is actually taken care of. We have instructed Commissioner Appeals to also dispose of appeals which are pending for more than 2 years and which are high demand appeals. So that is also an exercise.
And how many would those be at this point in time?
Well, those are about 1 lakh or so. And so we have, as I mentioned, we have ramped up the manpower also. And
a lakh in the quantum or a lakh in terms of appeals?
In the numbers.
In the numbers,
in
okay. That's a fairly significant number.
Yes, that is a significant number, but we have done a ABC analysis. And what we find is that substantial demand is pending, is corresponding to about 15,000, 20,000 appeals. So that is being given a push first, so that we are able to take care of it.
Sir, you and before I get the questions in. On the customs and indirect taxes side, sir.
Yeah, so on litigation front, as my colleague has mentioned about the direct taxes, under national litigation policy, the limits have been announced on custom side also, so that we can bring down the litigation at least from the government side. But from the trade side, they are free to litigate the matter as much as they want. The second thing which has been done in this budget, a time limit has been set for finalization of provisional assessment. That will be providing lot of certainty to the trade and will reduce the litigation. If you see, you mentioned about the Skoda case, Volkswagen case. I will not be going into the merit of the case because the matter is sub judice before the High Court. But I can say one thing, that earlier there was no time limit of finalization of provisional assessment. In that case, the provisional assessment remained pending for a very long time. Therefore, the demand is for a very longish period. So those kind of situations will not arise in future. So that again is a very significant step. The third thing I would like to mention is that to reduce the litigation or the procedural thing, in this budget a provision has been brought to declare on voluntary basis if certain material facts have come to the notice of importer post the clearance from the customs charge. So there, if it comes to their notice, then they can file a declaration, and in case some duty has been short paid, they can make the payment of duty along with interest without penalty. But this will not apply in case audit or investigation has already been initiated. Similarly, in case they have they have paid the duty in excess and they have to claim the refund, presently they have to go and file an appeal against their own self-assessed bill of entry. The appeal will take some time to decide. Then once they get a favorable appellate order, they will have to come back again to the department, seek an amendment in their bill of entry, self-assessed bill of entry, and then file a refund claim. This entire thing has now been short-circuited. Now they can file a declaration post-clearance. In case excess duty is paid, that itself will be treated as a refund claim. So this will also reduce lot of litigation which is arising because this facility was not available.
This is Sandeep Bhalla from Dhruva Advisors. One of the questions was, you mentioned about reducing litigation on direct taxes. There used to be settlement commission which has been abolished, or in some sense, that actually used to reduce a lot of litigation, particularly in search cases where, there were questions of facts, there were questions of law, which were also considered during the, so that was one. Is there a thought process to bring something like that back? There was a demand of the industry that wherever the appeals are pending for more than a year or more than a certain period of time, at least the first appellate authority is not passed an order, then at least allow the assessee to file an appeal suo moto to the tribunal, so that at least, because today the situation is that while the appeals are pending at the first appellate authorities, tribunals do not have enough work on their hands. So you file an appeal before a tribunal, it comes up for hearing within 3-4 months, mostly between 3-4 months. So is there a thought process on moving some of these appeals to the tribunal? So that's the second question.
Yeah, so insofar as the first issue is concerned, so that was a policy call that the settlement commission was done away with. But then simultaneously, as you would recall, that last July, and so far as the search cases are concerned, the concept of block assessment has again been brought, wherein as against the past where each of the years we used to be reopened under 148 and then would get time barred at different points in time, bringing in inconsistencies, because by that time the officer would also have changed and new set of interpretations would happen. So therefore now a block assessment concept would perhaps, that would ease the process of assessment, and then also a 60% tax on the entire undisclosed income. That concept has been brought. So therefore I think that is what we feel, that insofar as search cases are concerned, the process has been reasonably, streamlined or maybe made easier than what was there earlier. So that is point one. And then the entire search case would be actually considered in one go. The material would also be considered in one go, and that would, at least that would take care of inconsistencies in the approach, because the examination would be done at one point in time. And so far as the second point is concerned, that if there is a pendency with CIT appeals, then can it be actually escalated to the ITAT? At present there is no move like that, because it has its own implications. Because when it goes to ITAT, whether it goes as a first appeal or it goes as a second appeal.
Yeah.
Right. So that is also an issue that one has to actually see. So that is not under examination at present.
Not under examination. DA Secretary, let me come to you on one of the issues that, of course, at this point in time is grabbing headlines world over, and that's the move on cryptocurrencies. And ever since we saw President Trump come to office, we've seen a rally in cryptocurrencies. Is there, at this point in time, I mean, work was on a cryptocurrency paper here as well, and of course we brought in the tax, but the RBI has been steadfast in saying no to cryptocurrencies. What is our approach likely to be now in light of the many global developments that have taken place on cryptocurrencies? Any change in stance, any change in thinking at this point in time, sir?
Cryptocurrency, as we are aware, we have done a discussion paper, including at the senior level participation from the Reserve Bank of India, and the committee had finalized the discussion paper. But thereafter we find that when it was about to be issued, that several jurisdictions, and you named one, but more than one jurisdictions have changed their position on crypto assets in terms of their scope, where they see the utility, including for settlement, multilateral settlement of payments, cross-border payments. So there's one side, they're saying that much stronger use of crypto assets as a stable coin, which will have a large implications for an emerging economy like ours. The second one, using it as a multilateral settlement mechanism, which will again has a very major implications that how the global systems are organized. So in that context, we are recalibrating the paper, because the purpose of that paper is to pose the right questions to the stakeholders so that we get the right answers in terms of an appropriate answer to inform our policy making.
But what does the recalibration mean, sir? Because at this point in time, the RBI was very clear. They don't believe that cryptocurrency is the road to take at all. Is there a change in approach, given the fact that countries like the US are now full-fledgedly moving forward with cryptocurrencies?
So I will mention it that in 2023, when India had the G20 presidency, at that point of time, the stances of various jurisdictions, and I'm using the word jurisdictions instead of using the word countries, was fairly well known, and there was a stable position each one of them have taken. And this is one asset class which doesn't believe in the borders. We have to, what others will do, we have to be fully conscious of before we decide our own policies. It is not just a stable coin. At the 2023 issue was only different jurisdictions were looking for crypto assets as a stable coin.
Right.
Which is not a stable coin, doesn't have any much value. But a stable coin can cause a significant risk for our economy, for all emerging economies. Then a new element has come in. Some jurisdictions talking about a cross-border settlement doing it here, which is altogether a new dimension being brought in. So that requires to getting back not from the ground zero, but certainly going to the last stages of the drawing board and saying that do we have to recalibrate few of the questions so that we understand the risks very clearly and what can be the possible policies.
So by when do you believe this recalibration exercise will be over? And I'll get Mr. Nagaraju to comment on that as well.
I'll say that soon, but it may take a couple of months, but not longer.
A couple of months, but not longer. Mr. Nagaraju?
I support him.
That's an easy answer, sir. That's an easy answer. But let me...
We speak on the same voice, okay?
But let me come to you, Mr. Nagaraju. Two questions, sir. And one, I think that consumers here will, and across India, will be widely tuning into this KYC updation business, sir. And you made some announcement on that central registry. What should we expect now on this KYC updation, sir, if you can clarify for us?
See, the KYC now is the most authentic repository of information and also identity for the country. It is widely used. Now, a lot of data there is a duplication and incomplete data is there, and we have been trying to sanitize the data available. But it's not, till now, whole data we could not do that. Now we want to give a couple of things we want to do it. One is we want to use the AI. We also want to use face auth, and we also want to give verification view only to the clients, so that they will be verifying the data. And we want to do 100% and deduplication. That also we want to weed it out, so that the database is much more robust, much more authentic, and it could be utilized by all the FI agencies.
Okay. Quick question on banks as well as NBFCs, Mr. Nagaraju. And, you know, the pain on the unsecured side that was red flagged by the RBI, do you believe that that is now a thing of the past? It's behind us? Has it bottomed out, or is there a worry of higher defaults from here?
Yeah, it was some time ago, the RBI has expressed the concern. But if you look at it now, the net NPA of NBFCs is about 1.2. And the gross NPAs also decline. Now, unsecured loans depends on the exigencies of the citizens. If they require unscheduled expenditure, then only they take the unsecured loans. If they don't have, especially actually goes up during agriculture season.
Yeah.
Now the agriculture season is over, they have a decline. That's which is a normal seasonal thing. We don't see any actually risk, long, very sustainable risk for these loans for the NBFCs. They are okay.
They're okay, so you don't
Yeah.
believe that defaults are likely to move higher at this
I
point?
don't think so. There is, see, always there is a risk in the financial system, but we can't say that it doesn't exist. It exists, but we should be very alert.
Okay. And a quick follow-up question on the RBI's LCR rules, sir, on project finance. You know, are they likely to go forward? Are they on the back burner or are in the cold storage, sir?
I'm not going to second guess the RBI, but RBI has issued the draft. And we have conveyed our views on that. Now they have not issued the final draft, the regulations. So we will take up that line.
Okay?
Is that on account of your persuasion, or have they dropped the idea themselves?
They consult large number of stakeholders.
You're
And,
the biggest stakeholder.
And government is also a stakeholder because we have the responsibility of public interest.
Right.
And we don't want to lock up a lot of capital into this kind of ideal situation. So we have expressed our views based on the feedback we received from the industry. Okay. Now the RBI has not issued. So let us put a full stop there.
Let us put a full stop there. I get my cue, Mr. Nagaraju, but we've got a question here on MSMEs. Go ahead, sir.
Hello, sir. You answered about MSME, but it wasn't clear. Is the interest subvention scheme going to continue from 1st of January, or it's still for MSME?
I think the DA Secretary is responsible for this. He is going to answer.
There is a scheme on the for the exporters, that interest subvention scheme is there for MSME, and there is no budget provision from 1st April. So the answer should be very clear. So the idea is that when the resources are limited, choices have to be made where these can be most effective. So the idea is, should we facilitate more credit? If more credit has to be done, guarantees have to be provided. Those pools of money, the pools of insurance pools have to be, guarantee pools of money, capital has to be provided there. So government felt that that is a way to move forward, provide more credit, take the risk so that the risk is lower, bank charges it lower, rather than saying bank can charge because of a higher risk and then government will do the subvention. When we say that industry has to be more productive, it presupposes a question that government should also be very productive, efficient in use of taxpayers' money. This is one example.
Sure. Sir, so my question is to CBIC Chairman about the GST collections estimates. This 10.9% growth that we are projecting, that roughly is less than one of tax buoyancy. Now one would argue that 1 lakh crore of personal income tax which has been left in the hands of consumers will also lead to more consumption and perhaps more GST collection as well. So do you think that slowdown in GST collection is a concern, and therefore things like track and trace kind of a mechanism which has been talked about, do you think that that can be expanded to many other products to check the evasion?
Yeah, as far as GST collections are concerned, in this month the GST collection was very robust. In fact, it was 1.95 lakh crores and at the growth rate of 12.3%. So this is the second highest ever GST collection in the history of GST. So far the GST collection, as far as center is concerned, the net GST collection was growing at the rate of 10.2%. It was higher than the GDP growth, nominal GDP growth, but the ask rate of GST collection growth is 10.9% for center. And in the last quarter, normally the GST collection is better as compared to first 3 quarters of the financial year. And this month revenue collection gives us confidence that we'll be collecting the revised estimate, which is the same as the budget estimate for GST revenue collection, which is at the level of 10.62 lakh crores. So we'll achieve the target, and it is beyond the tax buoyancy, I can say, is around 1.12.
Okay.
So it is good tax buoyancy, and the tax compliance is going up because of the policy changes which have been brought and the enforcement actions which have been taken by the central department and the state departments.
Right. So that's as far as GST is concerned. We've got the last few minutes, so very quick questions. Go ahead, sir.
Good evening. My name is Dr. Umang Sahai. I'm a professional in healthcare and education based out of US. I've been looking at the healthcare in India, and I find, and my question is basically to all the architectures and architects of the Indian economy, that with the present 1.4 billion people living in India, you have a present multi-specialty bed ratio of 7,900 to 1 patient. And you have 90,000 seats in medical institutes. where the population of this country is 1.4 billion. Is it not the time to look at it for restructuring, re-engineering, revamping, and at both macro and micro level, so that you could provide sustainable medical and healthcare and education to the people of this country?
Thank you, sir. Economic Affairs Secretary, go ahead, sir.
So the numbers I see that in terms of super specialty treatment beds, I don't have that data, but number of seats 2014 were 81,000, both UG and PG seats put together. 2024, that number is 1.92 lakh. So it has more than doubled, 130% increase has happened. Plus, another increase of 75,000 has been announced, of which 10,000 is going to happen this year. So that plan to make it another big increase of 75,000, not just in the medical colleges, but also through the large hospitals, even the district hospitals, through our DNB seats, where they are qualified professionals are there, but they can't do the teaching. That is my understanding. Plus, in terms of reforms, opening up the medical colleges, what are the norms are there, that is a separate exercise going on. And just before coming over here, I was with a similar kind of a gathering done by CII, and where some of the participants were talking about that how the corporates would like to do open more medical colleges can be facilitated. Just give an example. Government of UP came out to the market for 6 district hospitals saying that upgrade the hospital, run a medical college along with that, give 50% seats for Ayushman Bharat, and out of 6 districts, they could succeed in getting an entrepreneur and medical institutions for 4 districts to do that activity. This is another way of increasing medical education in India.
Unfortunately, we're out of time, but I'm going to take one last question here before I get wrap-up comments. We've got the Defense Secretary, the Labour Secretary, and the Consumer Affairs Secretary waiting by patiently as well. So one last question, sir. Go ahead.
Thank you. This is Mahesh from Deloitte. Good evening. It was a blockbuster year in 2024 for GST, so the expectations are now only higher. I just had 2 suggestions and 2 questions. The suggestion is that, if a little more focus on export-related transactions which are getting taxed, if some clarifications can come out, like it did on the data hosting and advertising, that will be a welcome one. And so on the MSME front, if we can look at more rationalization on the registration. I know it's a balancing act between keeping, tracking what the sellers do and all of that, but we could start either with e-commerce and some sectors where we could have checks and balances. My 2 questions were from the AEO scheme. Is there anything that we can expect? I don't think it's a budget. It can even come during the year. You all had set up a committee to have enhanced experience for AEOs. And the second is whatever potentially may have got missed out in the council meeting, which needs a legislative change. Does industry have to wait a year? Or like the online gaming, can we expect something during the year? Thank you.
Go ahead, sir.
Yeah. So you have mentioned about there certain services where the transactions happen across the borders. So to bring better clarity, this issue was taken up before the GST Council. And because this, in certain situations, the default rule of determination of place of supply is not applicable. It is in case of, say, intermediary services. So there in the GST Council, a decision could not be taken. An issue has been deferred. So the issue which you have raised, those kind of issues will be taken care once a decision is taken in GST Council. Second thing about the GST you mentioned is registration. For that also a concept paper was presented before the GST Council, because we also feel that as we noticed that there are fake entities which are entering into the ecosystem. So we tightened the registration process. In the process, maybe we started asking for documents based on the risk approach. Taxpayer, the potential taxpayer or the new taxpayer has to go to the biometric Aadhaar authentication centers. In certain situations, the premises were marked for physical verification. So we tightened the registration process to keep these fake entities from outside the system.
Right.
Because it was creating problem for the buyers, suppliers, and the entire ecosystem was getting vitiated. So this registration process was tightened. But in the process, we noticed that there are certain taxpayers who may not be passing on the ITC. So for them, they may be mostly having the B2C transactions.
Right.
There the process can be simplified. So a concept paper towards that has been presented before the GST Council, and it emerged from the council deliberations that we need to work further on it. So in principle, yes. So it will have to be further fine-tuned, and then maybe in the next GST Council meeting, before that, that report will be ready.
Okay.
A decision can be taken so that process can be simplified for certain types of entities, and which may be a huge chunk of entities which are entering into the GST ecosystem. Then you mentioned about customs AUO, whether more things can be provided to AU so that they are encouraged to join, new entities or new businesses are encouraged to join the AU ecosystem. Yes, we are working towards that. Maybe certain more benefits can be extended to the AUs so that it can become more attractive. And you...
Sir, that's it. He had a long list of questions. You've answered all of them. 10 seconds to each one of you, and I'll start by asking you, how confident do you feel about meeting the numbers that you have spelt out in the budget, sir, given all the global uncertainties that we're also going to be dealing with? I'll start by asking you, confident?
Yeah. So for RE, which has been set in this year for indirect tax collection, we are definitely, the ask rate is 7.1%. We are sure that we'll be achieving those targets. And the B, which has been set for the next year, that seek us to grow at the rate of 8.3%. We have done our math in projecting those figures, and we are confident that we will be achieving those unless, due to the global uncertainties, there is impact on GDP growth.
Okay. Ms. Agrawal?
Yes, we are very confident. The way we are growing in this year at the rate about 14.5%, I am confident that we will close this year with the targets that we have been given. So far as the next financial year, we have done our maths right, and I am very, very hopeful that we should be able to meet the target.
Beat the target, not just meet or beat?
Well, at least meet the target.
At least meet the target. Mr. Nagaraju, the headline from you, and also lots of questions coming in. One final question. Will the MDR rules change? Will it be the end of zero MDR anytime soon, sir?
That is under consideration. We will let you know the policy decision when the decision is taken.
But anytime soon, sir?
Yeah, soon, this year.
This year. Mr. Seth, I'll close by asking you, growth 6.8% now, doable on the back of the measures taken?
Certainly. Given that what the external environment today is, presuming that this remains as it is at the moment, we expect the next year growth to be towards the upper limit of the band which have been suggested in the
economic survey, which is 6.8%. Ladies and gentlemen, a big round of applause for the Economic Affairs Secretary, the DFS Secretary, the CBIC Chairman and the CBDT Chairman. We truly appreciate you joining us here. We are going to do a quick change in our cast. We have the Defense Secretary here with us, also the Labour Secretary and the Consumer Affairs Secretary. May I request them to join us on stage, and may I request the team from North Block. Thank you very, very much for joining us here this evening, ladies and gentlemen. Appreciate you joining us. No, there's no time to leave the room. I'm sorry. We're live. We're not leaving the room. We're starting the next session right away. May I request the secretaries to please join us on stage. Mr. Singh, could I request you to join us on stage, please? Mr. Singh, may I request you to join us on stage, sir? Thank you so much. Thank you. Appreciate it. Thank you, Mr. Nagaraju. Appreciate you joining us here today.
more modest increase of about 5.5%. But I want to emphasize that what matters in defense is not really the annual allocation. What matters is the number of contracts you are able to sign up and thereafter fulfill, because that really determines your pace of expenditure. And in that, let me assure you that we are on pace right now to sign the largest number of contracts ever in our history.
Okay.
The largest last year was another high of 1,08,000 crores. This year we've already hit 1,15,000, and my intent is to double last year's number before the end of this financial year, and the result in terms of expenditure will follow thereafter.
So doubling by the end of this financial year, sir?
Yes, I intend to cross 2 lakh crores and maybe even more. Coming back to the other issue of reforms, from day one, after I've joined this ministry, my focus has been on procurements. That's an area which has always been bedeviled by delays. We've identified where the delays are. The delays are in a lot of, in 3 specific areas essentially. In terms of the delays in finalizing the documents, the RFPs, delays in the field, what they call the field evaluation trials, and thereafter the delays in what they call the cost negotiations. All of them take years at a time. And those are the areas where we are going to ensure accountability in terms of much shorter timelines. And that is why, as I said, I intend to ensure that our contracts this year will be double, if not triple of last year. And we intend to ensure that order books are full across the board in the defense industry, so that everybody has visibility, everybody from the OEMs down to the component manufacturers, that their order books are full for the next 4 to 5 years, and everybody is on the same page when it comes to fulfilling our capability gaps.
Well, that's quite a headline, sir, when you're talking about doubling and tripling and order books being full for the next 4 or 5 years. But if I may extend this conversation to react and respond to what has happened globally, and the comments coming in from President Trump saying very specifically that India needs to do more by way of procuring security equipment from the United States. I was just taking a look at the numbers, sir. India's already bought defense technology worth over $25 billion from the US since 2007. So when you hear President Trump saying that we need to do more in terms of procuring US security equipment, what does this mean? What should we realistically expect? What's on the table?
So first of all, of course, this has nothing to do with the budget.
No, it doesn't. But it's linked to the overarching landscape that we're dealing with.
Sure. So we do have some procurements which are on the anvil where American companies would be in the picture, and as long as they are able to meet our requirements in terms of quality and in terms of certain levels of indigenization, of course we'll be, those are carrots that we will be able to dangle before the Americans, and hopefully we'll be able to give some of those contracts. Let me stress that India has already ordered some 1,500 odd civilian aircraft from both American and from Airbus about 1.5 years back, over the last 1.5 years, which means in a sense that we've lost some leverage there. We've also already ordered these Predator drones a few months back. So yes, we are already meeting a good proportion of our requirements from capable American companies, and we intend to continue doing so. There will be significant buys, and some of that will go to the US as well.
Could you lay out for us where the conversations are on any specific contracts or any specific items at this point in time, sir?
See, we've already ordered these Predator drones. We have these engines that are already ordered, which in fact the delays on their side in terms of meeting some of those timelines, although now they've given us a revised timeline where it starts from March, and then they start delivering about 12 next year and 20 every year thereafter. So yes, I mean some of those delays also on these Apache helicopters, the delays are on their side actually. On the anvil, there are some other potential areas where we can talk to them in terms of transport aircraft, maybe some infantry vehicles, and possibly some additional reconnaissance aircraft as well. So yes, there are some potential buys there where their companies can be contenders. That is all I would be able to say at this stage. But yes, there are areas of interest where we can engage with them and possibly find common ground and win-win solutions with the new US administration.
Common ground and win-win solutions. I appreciate you being able to share what you have been able to. I know that this is a sensitive issue, Mr. Singh, but let me get the Labour Secretary into the conversation as well. Thank you very, very much for joining us. The last budget had put together a scheme as far as internships and so on and so forth was concerned, and this budget is ostensibly taking that forward through the National Manufacturing Mission, through what they're attempting to do as far as MSMEs are concerned and so on and so forth. How does this open up the employment and the labour market, and what do you foresee as the impact and the implications of the budgetary announcements?
You see, the employment-led development theme of the budget shows how it prioritizes employment and job creation. And in fact, if you search for the word employment across the speech of the Honorable Finance Minister, you'll find it appeared multiple times, 17 when I counted it. So when we look at this closely, this builds on what was announced in July last year, the employment-linked incentive, which was one of the schemes under the Prime Minister's 5 package, creating opportunities for skilling, internship and employment for the youth. It's very interesting when we look at the budget document, how in various sectors, in multiple initiatives, job creation has been prioritized and intertwined with growth and investments and with the institutional mechanisms. So when we look at the focus on MSME, the limits which have been increased, the investment and turnover to enable them to grow faster, and also the credit availability for the MSME.
Yeah.
And MSME we know is a major growth driver of jobs in the country. So that's a very major initiative. Something like 25 crore people are already employed by almost 6 crore MSMEs in the country. So this is definitely going to bring more quality, more production and more exports. Similarly, there's the labor-led sectors, manufacturing sectors, footwear and leather alone is expected to create 22 lakh jobs, and then there'll be the indirect jobs, and of course making India the global hub for toy manufacturing. And when we look at food processing, the focus on food processing in the eastern part of the country is going to bring a multiplier effect on jobs, whether in the logistics sector or production sector. Then again, there's tourism, hospitality, Heal in India. There is the social security coverage for gig workers, and the platform economy is an emerging major driver of employment. And of course, there's the shipbuilding, which again will have direct, indirect impact. You want me to go on?
No, that's a long list. Since you mentioned gig workers, yes. I have someone here who's been waiting to get in on a question on gig workers. Go ahead.
Yeah, thank you. Good evening. My name is Prashant Singh. I represent Avigna Enterprises, which is India's largest gig platform. And we have been closely looking at the budget for gig, and there was a mention of social welfare scheme for gig. But the definition of gig, ma'am, is not very clear in terms of who should be registered on eShram, and then how the insurance will be taken care in terms of multiple employment for the gig. So we would like to know more, if you could please throw some more light on this, that how it would be taken care for the gig workforce. Okay. And last but not the least, also how being an MSME and a fastest growing startup in this domain, what benefits the companies can get from this. Thank you.
Thank you so much. Go ahead.
Yeah. See, there is a difference between gig work and platform work, and the platform worker is also a gig worker, but on a digital platform. And the scheme which has been announced is for the platform workers on the digital, work space. And as we know, the digital workspace has created a plethora of employment opportunities for the people, for the young people. And this is a very flexible work area, very flexible workspace. Also very distinct from traditional employment where there are work contracts and there's social security and so on and so forth. At the same time, the platform workers face a lot of challenges in terms of their work schedules, the flexibility, the algorithms, and so on and so forth. Giving them social security coverage has been a priority of the government. If you recall the Social Security Code, which was passed by Parliament in 2020, that defines a gig and platform worker for the first time. And I would say that this is one clear definition that India has actually given in the world. We are the first to clearly define that these are workers who are outside the traditional employer-employee relationship, which also makes them vulnerable, and which is why this is a very significant milestone that the budget has announced. Social security coverage under Ayushman Bharat Prime Minister Jan Arogya Yojana, which will give them 5 lakh rupee coverage for secondary and tertiary treatment for the year, and it will bring access to thousands of, of course, they'll be staying in one place, but the PMJY gives you access to more than 30,000 medical facilities, institutions in the country. I think that's a big step, and what is going to happen now is that we encourage the aggregators to get onto the e-Shram. We've already been working with them, register the platform workers, they get identity cards, and then they get access to the PMJY, the Ayushman Bharat medical health care scheme.
Right.
And that is going to happen in a stepwise manner, but very fast. We are going to move very fast.
Thank you for giving us clarity on that. But let me come to the Consumer Affairs Secretary as well. Ma'am, it's a volatile environment as far as commodities are concerned, but specifically on the back of the domestic challenges as well as the global challenges, what do you believe the budget has been able to prescribe to be able to cope with some of those?
So I think the budget actually, a very encouraging effort was, the announcement of a 6-year mission on Atmanirbharta in pulses. And this is something which is very important because over the past 2 consecutive years, we've been seeing the impact of El Nino effect, which actually brought down the production and productivity of both, pulses, cereals and vegetables. So the retail, the average general retail inflation, we can see that, although it is declining, and the food inflation has also come down and will be further, decline. But I think this self-sufficiency in pulses is something that, it will basically increase the affordability and the availability of an important food ingredient. So I think a very important step has been taken up in this budget announcement.
Yes, a very important step indeed. But Mr. Singh, if I can come back to you again, sir, and I was just again taking a look at some of the numbers. There's been a significant jump of 43% in the capital budget related to the BRO. There's also been a hike of, I think, 12% as far as R&D is concerned. And also in terms of, the roadmap for the next financial year, if you can lay out a little bit more color on the indigenization front as well, sir.
Yeah, so under the leadership of the Prime Minister, we've basically decided that we are going to spend most of our defense money within the country. And in the current year, the breakup is about 75% within and 25% outside. We are going to double down on those indigenization efforts as part of our moves towards Atmanirbharta and to preserve strategic autonomy by ensuring that our supply chains are robust and to the extent possible within the country. So along with the focus on indigenization and the what I mentioned in terms of streamlining procedures and timelines, we also want to ensure that many of these DRDO-led technologies that they can license to the private sector. There are 2 or 3 different modes there. There is a development cum partnership model. There is a strategic partnership model. Some of them have been successful, and we intend to sort of expand those further to ensure that the private sector gets access to DRDO's technology and DRDO gets access to private sector efficiency in terms of providing the manufacturing muscle for taking these technologies to the benefit of the services. So those are the kind of areas we are going to really focus on as part of the year of reforms that you mentioned earlier. I also want to mention that you've seen templates like the C295 where even when there is a foreign OEM which is coming in, we take a very limited quantity from them, and the rest of it he has to really make in India, preferably with either a public or a private sector partner. Those are the kind of models and templates that we'll sort of insist on in the future. As I said earlier, we've got one of the most liberal FDI regimes now in the world when it comes to defense. 74% is automatic. Our message to the OEMs is pretty clear, foreign OEMs in particular, that if you want a slice of India's defense pie, you'll have to be here making in India. And of course, you can make in India and make for the world as well.
Speaking of making in India and making for the world, sir, on the export aspiration and the export ambition, if you can lay out for us, what we should expect, what the priorities are. For instance, as far as the BrahMos missile exports to Indonesia are concerned, what is the realistic plan going forward as far as the export ambition goes, sir?
So our exports have gone up about 10x in the last decade. It's reached 21,000 crores now. It's still a small slice of the overall global arms trade, about 1.5%. Obviously, there's tremendous room to grow. Now that we have a fairly large expanding private sector ecosystem as well, let me stress that a lot of these exports are being done by the private sector. Public sector also, because of geopolitical conflicts, many of our public sector units, including Munitions India in particular, have also started getting a lot of export orders as well. Their order books, as I mentioned earlier, are full, and in fact, they are finding it difficult to meet domestic needs at times. But geopolitical conflicts aside, there is a tremendous scope for a lot of Indian technology in areas like missiles that you mentioned, and also in land systems and artillery, where we have a lot of good domestic capacity now, also in ammunition and shells. These are areas where there is a lot of potential, particularly for friendly foreign countries in Asia and Africa. We intend to focus on those markets, and some of those steps are going to be sort of some of the facilitation you'll see as part of Aero India in Bangalore in the near future, when a lot of, I think, 60+ countries are coming, and obviously we'll hard sell some of these products to them and hopefully find more and more buyers for our defense industry, both private and public.
On the defense PSU side, sir, in terms of capital infusion, in terms of expansion plans to meet the kind of requirements, both domestic as well as the export ambition that you spoke of, what should we expect on the road ahead from a defense PSU perspective?
Yeah, so defense PSUs are, as you are aware, in two categories. There are these newly created defense PSUs from the old ordnance factories. They still need some capital support to expand, even to meet their new export obligations. The older ones, which includes many of the shipbuilding firms, their order books are quite good, quite robust. And when it comes to shipbuilding in particular, we do have a tendency to support our public sector more, although in the future we will rely on some of the emerging private sector capacity as well. So for them, for the old PSUs, the focus is on giving them enough orders so that they have a good visibility in terms of the next 4 to 5 years. For the new PSUs, there would continue to be some level of budgetary support. Some of that was announced in the budget as well.
Labour Secretary, if I could get an update from you. It's been a couple of months now since the budgetary announcements of the last budget were operationalized. On the internship scheme, for instance, where do things stand? I know we've already expanded the universe of companies that are now eligible to partake in the scheme. Give us a rundown, a status check of how this has panned out so far.
I can give you a status update on the employment-linked incentive. That's what our ministry is dealing with. But the internship scheme is with the Ministry of Corporate
Affairs. Yes.
So I'm as good as what comes in the papers.
Okay, so give us an update on the employment-linked scheme, ma'am.
Right. So the employment-linked incentive, we've had a huge number of consultations with the industry with the idea of making it a scheme which rolls out in a simple and effective manner and leads to more job creation and actually incentivizes employment where it is created. And we've had a lot of consultations with the trade unions as well and with the ministries. And we've been able to put together a blueprint for the employment-linked incentive scheme in a manner that it is effectively used and with a lot of learnings from the Atmanirbhar Bharat Rozgar Yojana. And I would say that now we've also consulted the states. We've had regional interaction with industry across the country. And with all this hard work behind us, we've put together the blueprint, and you should see a rollout soon.
Okay, we've got a question here, ma'am. Go ahead.
Thank you, Shari. My question is for Sumita, ma'am. Actually, I was waiting to meet the Labour Secretary because this moment you are the most important secretary for India. Because we are dealing with the plummeting, employment, and that's the most important issue India is handling. So instead of treating it as a sectoral issue, what is the additional work we have to do to tackle this issue of employment as the macroeconomic issue of our country? Because recently, International Labour Organization, there are discussions that we cannot treat labor as a highly fragmented issue. This has to be the macroeconomic issue of the country. Because unlike, the Western world, employment is not the mandate of the the central bank. For them, in the inflation targeting employment, that variable is there. But for us, it's not there. So how can we do that macroeconomic framework? Because we have done that for the gender. Because gender is not considered as sectoral or as soft issue. That is the commanding heights. So similarly, how can we take this as a macroeconomic issue, as the most prominent issue of India? Yeah.
Okay. Okay, thank you for asking this question. It's going to take a little while, but I'm going to compress my answer. First of all, I do not agree that there's plummeting figures, there are plummeting figures of the employment. If you look at data, and data speaks, I'm going to speak only evidence-based, data now. You look at the PLFS, the Periodic Labour Force Survey data. It shows that there is an increasing trend in the labour force participation rate. There's an increasing trend in the worker participation rate. Today we are at 60% and more of the labour force participation, 58% and more of the worker. And if you see the unemployment rate, today India's unemployment rate is amongst the lowest in the world, also in the Southeast Asia. Yet, we have a demographic dividend. And when you look at the young people between the age of 15 to 29, you will see the unemployment rate, and you quoted ILO, I'm going to quote ILO. They have given us information, there is data in the public domain, that the unemployment rate among the youth has come down from 7% to 5% in India. And if you look at the PLFS, there again the unemployment rate has come down from 17% to 10%. So this is about data. And if you look at the claims data analysis of RBI, which is again riding on the PLFS data basically, you will see how India has added millions of people to the workforce in the last couple of years. The claims data has shown about 643 million, about 64 crore people in the workforce today, which is up by 473 million, a couple of years back. So all this points towards growing employment. You look at female workforce. The female workforce, it's very significant to see it's crossed 40% in the country. And there again, you do see a trend towards self-employment. Women being, there's nothing wrong in being self-employed. Let's not have value judgments. Let's look at the data. I'm only going to speak about data and what the data is telling us. There's nothing, I'm just inventing. Women, if you look at the women workforce, there is a movement towards, there's a slight decline in the salaried and slight decline in the casual labor and movement towards self-employment. The self-employed are also employed. If you look at the ILO definition, you look at the PLFS definition, because they're contributing to economic activity. So if they are contributing to the profit on the farm or they are getting paid for it, they are part of the workforce. Now, there will be other aspects. You will say that they should be paid better. Nobody is denying all these things. Now you come to the budget. The budget has shown how job creation, employment is a multi-stakeholder commitment. It's a multi-stakeholder effort. And that's where the industry and the different sectors of the economy, the service sector, which is, you know, yeah, so that's a long answer.
No, but a very comprehensive one, so thank you for that. But Ms. Khare, you know, linked to employment as well as the global challenges that we're faced with, the opportunities for skilled workers looking outside of India at this point in time, and I know that is an area, you know, that many stakeholders are going to have to look at in the context of what's happening with the H-1B changes and so on and so forth. I mean, is this something at all that you're looking at as you know, as challenges that we will have to deal with and cope with?
I mean, I would say that although this should be best answered by MEA and other agencies, I can only say that, you know, our labor is a very highly skilled labor which is applying for jobs elsewhere and also gets very highly regarded and respected. So the job offers are actually, you know, coming from all kinds of, you know, locations. So I don't think there should be a cause of worry.
You know, speaking of challenges as well as the road ahead, on, you know, sunrise sectors like electric mobility and so on and so forth have, of course, got a fair degree of attention from the government as well as from the budget. But there have been issues, for instance, that the CCPA and all are looking into at this point in time, consumer complaints with regards to electric mobility, specific companies. Where do things stand on that front? And there's again a demand of perhaps more harmonization of standards and so on and so forth. How do you look at that as we move forward?
So what the Central Consumer Protection Authority does is basically looks into a lot of complaints which get registered on the National Consumer Helpline 1915 and then decide whether it's a fit case for class action for violation of consumer rights, unfair trade practice or a misleading advertisement. Now, in case of the EV, we found that there were more than 10,000 complaints which got registered within a span of a year. And we thought that this is a fit case for taking it up as a class action matter. So the matter is there. There is a procedure in which the authority works. Notices are given, an opportunity of hearing is provided. The whole objective is to make sure that the people who are behind it, they should step up their grievance redressal mechanism. They should also be able to, you know, especially if there are issues of product liability or deficiency in services, that also needs to be ramped up. So I think CCPA has been doing and looking at all these issues largely to make sure that the consumer satisfaction in the country is very high.
But have you arrived at a conclusion now? Or are you anywhere close to arriving at a conclusion in this particular matter which pertains to Ola?
So this matter is under investigation, and I think we can rest our case from that.
Okay, the matter is still under investigation. A question here for the Defence Secretary. Go ahead, sir.
Good evening, sir. Vivek Arora here. So you mentioned that 75% indigenization we are talking about as far as, you know, defense spend is concerned. Now, looking at the sensitivities of our neighbors, Pakistan and China, so to speak, you know, how do you balance the build versus buy against this, you know, Make in India thing? Because we need to have a speed of execution and getting our defense supplies up to speed, looking at the speed at which the neighborhood is getting their supplies.
Yeah. So it's an important point, and there is obviously always going to be a trade-off. Although, to be very frank, even global buys now have been very badly affected by geopolitical conflicts, as a result of which you would have known that two of our biggest suppliers, Russia and Israel, both have conflicts, and they've had to delay some of their contractual commitments to us as well. So there's no guarantee that, in fact, there is less guarantee in some ways at times. So yes, from time to time, where we have technologies that are promising enough to put our bet on, we will be going the indigenous route. Where we have capability gaps that we need to fulfill fairly soon, we will have to do a certain amount of global buys. But we are confident that, I mean, it's not an either-or situation. I've mentioned some of the templates that we have now of strategic partnerships, of collaboration between public and private, and between foreign OEMs and Indian public sector and Indian private sector companies. So we intend to follow all those routes, basically take a pragmatic view of those trade-offs and ensure that our services requirements are met. But in the long haul, we intend to double down on indigenization, as I mentioned.
Doubling down on indigenization. Labour Secretary, let me come to you. More questions coming in. Social security refunds of H-1B visa holders, is that something that you're looking at or looking into at this point in time, ma'am?
I'm sorry, is that about the labor codes?
No, this is on the social security refunds of H-1B visa holders.
Okay. So I'm afraid that's something which MEA deals with, but you could ask me some related questions.
Okay. No worries. What I wanted to understand from, we've got a question here for you from this gentleman here. Go ahead.
Thank you. My question is for Labour Secretary. Ma'am, you talk about Social Security Code 2020, and Government of India has also introduced IR Code 2020. So when we really look at gig workers, and they have to register on SRAM portal, so one aspect that I really want to understand from you, there is also digital divide. If you look at the categories of gig workers, so contractual laborers, so they also fall. There are various categories. So digital divide is there in India. So how you really look at the idea or impact of IR Code 2020 and Social Security Code? Did you also see the change in terms of legal cases so far the labor courts are concerned? Thank you.
Thank you.
Was that the legal?
The labor code, ma'am.
Labor codes.
Yes.
Okay. Right. So as I understand, you've asked me two questions. One is about the digital divide and the platform workers, and the other being the labor codes. Yeah. You see, I will not be able to comment very authoritatively on the digital divide. It's all perception based as far as I'm concerned for me to answer that. But we do see a growing trend in the platform economy. And the platform workers today are numbering around 1 crore. And in another 5 years, they're expected to double, more than double, go up to 2.35 crore, despite the digital divide. But I'm sure that is also an evolving situation. And people are very fast, the young people are very fast at learning all these aspects. So that would be my comment. And where the labor codes are concerned, there's been a lot of prep work, and we are a federal system, and all the states have been working on pre-publication of the rules under all the 4 codes. We have here we are doing 2 things. One is ensuring that all the states pre-publish their rules, and all the union territories as well, and that's been an improving number. Today around 34 states and union territories out of 36 have either pre-published or about to pre-publish in this month. Second is the quality of the draft rules which each state has put together, because we would like to ensure a harmonized, standardized rollout of the labor code, and the businesses should not have to deal with different interpretations across the country. And we worked very hard there. We've had regional conferences, we've given report cards to all the states, and we've been able to improve the quality of the draft rules as well.
Well, so 34 have already come on board in terms of either pre-publishing or soon to pre-publish. Thank you very much for that clarity. Ms. Khare, let me come to you now. In terms of the key priorities, the top 3 things that you will be focusing on in the new financial year, and what we should now expect on that front.
So the major thrust would be basically to have the food security, to also have a control over retail, especially food inflation. That will only come if we have self-sufficiency in major crops. And I think with the help of the central nodal agencies like NAFED and NCCF, we can also assure the farmers that whatever they produce, and if they pre-register themselves with these agencies will procure as much as is offered, and that will also not only support the farmer but also make sure that there is enough for the consumers. There is also a thrust on, how we strengthen the supply chain.
Right.
Because, from different, estimates, the production is good, but because of poor storage, because of also, lack of quick supply chains, quick turnaround to the major centers of consumption, there is a very high chance of spoilage of food. So these are some of the concerns, and these are the
priorities as well. Absolutely. Defense Secretary, I'll give you the final say, sir. Since you were talking to us about the priorities as well as the roadmap, one, a lot of speculation on what is likely to happen in our dealings with France, with the Rafale, for instance. If you could share any light on that, sir, to start with.
I won't talk about specific procurements. I'm sure you don't expect me to either. But it was worth a try, I guess, from your side.
Can I add another one worth a try then? the GHAL engine contracts. Again, there is a lot of reportage on the fact that they're asking for a higher price now. If you'd like to comment on that.
Okay, so there are two contracts. One is for the existing. For the Tejas, which is the 404 engine, that contract is already signed for 99. That is the one I mentioned where they've delayed by 1.5 years, but now they've given us some timelines of delivery starting from March. The one you're talking about is the 414.
That's right.
That one is still at the negotiation stage between HAL and GE, who are both outside government. We don't have an authoritative feedback as yet as to where, HAL cannot give you an authoritative feedback until they complete the negotiations. So, I've been hearing in the press that there is some increase in costs and all that. I'll wait for HAL to come back to us on this. I really wouldn't be able to say.
Fair enough, sir. So let me end by asking you, Mr. Singh, to give us what you believe will be the comprehensive headline that sums up the mood post the budget 2025 for the defense sector in specific, sir.
As I mentioned, 2-3 main priority areas are there for us. One is that we cut down the procurement timelines. 2, we sign more contracts so that you start fulfilling them and start utilizing the money. 3 is, of course, continuing focus on indigenization, at least 75% of our money going within the country. And finally, from the tag of being the world's largest or one of the largest importers, increasingly become an exporter.
From the largest importer to a large exporter, that's the aspiration. Ladies and gentlemen, a big round of applause for the Defense Secretary, for the Labour Secretary and the Consumer Affairs Secretary. Thank you so much for joining us here on the CNBC-TV18 Budget Verdict and giving us a very comprehensive view on where things stand for your ministries and what we can expect in 2025. A big round of applause and thank you very, very much for your time today, sir. And with that, ladies and gentlemen, it is time for us to wrap our Budget 2025, the verdict. Thank you to our participants for joining us here this evening, and thank you to everyone on CNBC-TV18, on our YouTube page, on our social media handles and on television for joining us for our live coverage. You've heard from the budget makers and you've heard it from all the important stakeholders of the government on what they intend to prioritize for the road ahead. From all of us here for now, goodbye. Many thanks for watching.